determining that I was going to do it. But I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Global news 24 hours a day, on air and at TikTok on Twitter. Powered by more than 2,700 journalists and analysts in over 120 countries. This is Bloomberg Radio. Now, a global news update.
Special report, coronavirus pandemic. The European Union this morning is slamming.
Night is still young, but a little late to get into the wrong ride, don't you think? That's why I choose Ola. With secure start codes unique to every user, there's no way anyone can ride a car that's meant for you. Good night.
Ride the change with Ola. Download and sign up now. Enjoy no surge pricing until the 12th of April.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL. Every journey matters.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
1 hour and 43 minutes away from the opening bell in New York City, down on the week by around about 8 percentage points on the S&P 500. Futures earlier in the session, limit down. Right now, the S&P 500 off by around about 5%. In the bond market, what a move yesterday. We didn't get the move you expected. The risk mitigating characteristics of treasuries just eroding a little bit. Yields were higher, but not for the right reasons. Today, yields lower, aggressively so, down by 18 basis points on a 10-year. In foreign exchange, only one currency pair to watch. In around about 1 hour's time, we'll get an ECB rate decision from Christine Lagarde. Euro dollar, the lows of the year, a break of 108. The highs of the year, very close to 115. And that range shaped up in around about a couple of weeks. Today, can we get a weaker euro? And will they use the rate channel, Tom, to generate that kind of move? Right now, euro dollar, 112.23.
John Farrell, thank you so much. Futures negative 132, down futures negative 1231. The VIX again, 30s, a bit of sweat. 40s, 50s, 62.75. I got a daily close, Lehman lows of an 81. So we've moved from that 40.50 up to 62.75, up 9 big figures on the VIX. And to give you perspective there, back to 2008, just real simple, out to 81 seems to be the worst case there. I just want to give you this headline. I haven't looked at the note yet. Edward Morse, the oil giant of Citigroup, publishes the impact of the virus on commodities through the weeks. He says simply, oil prices crashed recently, triggered by the OPEC Plus failure. We'll get into that note in a minute. Right now with us, Gina Martin Adams, as we look at the equity market. She, of course, drives all of our equity work and research at Bloomberg Intelligence. A lot of discussion here about people that own equities and they wrap a bond trade around them, dampening risk until it doesn't work. Are we at a point where a blended equity and bond trade, where the equities often are leveraged, borrowing money to get bigger return when it works out, are we at a point where that trade doesn't work anymore?
Yeah, I mean, I think it depends on whether you're talking about risk parity, which is really about volatility in the asset prices, or simply about price combination. Price combination is still working, right? Bonds are still rallying effectively. Yesterday might have been the beginning of a little bit of a bond sell-off, but we'll see after today, after the ECB after all the action in the equity market, you could have a reflight back into bonds. The trouble is with parity strategies, which are really based upon the volatility of those two asset classes. You've got the MOVE index spiking, you've got the VIX index spiking. They're both completely off the charts. That's creating a lot of trouble for anybody with a volatility focus. But when you talk about sort of the asset classes themselves, you're still seeing a benefit from having that bond exposure in general. It's just a very, very volatile landscape. And when you're talking about 10-year treasuries below 50 basis points, obviously a lot of investors get nervous that we head for the zero bound.
Gina, this is such a punishing market right now. If I told many people that in yesterday's session, before we started, yields would be higher at the long end, the curve would be steeper, where are banks going to be? I'm not sure many people would say banks would be down around about 6% on the S&P 500.
Yeah.
What's happening beyond just the concern about rates?
Well, I think it's panic. I mean, this is just sheer panic. Where
Are we
everybody
using
sells
the P word
everything.
this morning?
It's definitely panic, and it has been though. I mean, this is what's really interesting about this sell-off over the last 3 or so weeks, relative to any sell-off that we've been through, including 2008, is from the very beginning we had signs of panic. We had signs of absolute washout in sentiment. I mean, you just don't get 5%, 6% down, 7% down days at the beginning of a crash. That's extremely unusual.
You guys keep this going, but can I point out to the panic-free that gold hasn't moved?
Yeah.
16.38 an ounce.
Although we can go back to sell what you can, not what you want to, and you can discuss the dynamics there underpinning gold. Gina, you use the word panic. One reason why I always love speaking with you is that you look at the fundamentals and you take an even-headed approach to what we're actually pricing in.
Yeah.
At this point, given the declines that we've seen and the declines that we're poised for today, what are we pricing into the U.S. equity market?
We are now pricing recession in the U.S. We're pricing a light recession a la 2001. I mean, it's been so long since we had a light recession. It's really difficult for many to remember. But 2001 was a year in which we had 2 quarters of negative growth. They were split apart because we were kind of climbing our way out of a slow growth period when September 11th hit. And then we had more panic. So we've done a lot of comparisons back to 2001. But if you look over time at your average compression and PE multiples, we're there. Over the last multiple crises in the equity market, you get an average decline in PE of about 25%. We've had a 20% compression. You get an average earnings drop of about 14%. So we've priced a light recession. We have not priced something like a 2008, 2009 catastrophic recession experience.
Based on cash flow estimates of all of the analysts at Bloomberg Intelligence, does this seem appropriate? Are the levels that we're looking at right now and the declines in earnings, is that accurate?
You know, it's really difficult to say. Just to be completely honest, no one knows how long the panic is going to last. And this is the trouble with this situation is we're not talking about rational sort of behavior. We're talking about panic behavior. We're talking about panic behavior in the real economy with the grocery store shelves somewhat empty. We're talking about panic behavior in the asset prices as well.
I tried to do a prime order last night. No delivery time.
Yeah, but it was only beer. You just ordered 6 cases of John Courage.
3 days.
Okay, a panic. And this goes to what Dr. Alarian said. Alarian's joining you in the 9,
Yeah,
right?
9 Eastern, yeah.
9 o'clock. Mohammed Alarian with John Farrow. Look at that on another Farrow property. Okay, fine. There's panic, but as Dr. Alarian mentions, it's orderly panic. Did you see yesterday within the electronics of the day, it's not an image of 1929. I'm sorry, markets are acting orderly, right?
Yeah.
I don't see gap bids, do I?
Not yet, though.
Agreed,
I will see the percentage changes are very disorderly. So I think it depends on your perspective. Again,
see how she said that,
the way that we, you know,
she said that?
the way that asset prices are moving.
That's how I heard
it. Said in any way, shape, or form. Gina, go on.
Yeah, the way that asset prices are moving so viciously and so rapidly is akin to a 2008 or a 1987 or a 1929. That rapidity itself is very, very different. But you can clear trades. Liquidity isn't in a crunch, right? There's no liquidity crunch. Nonetheless, there is this really vicious repricing that is extremely unusual.
John was at a data check, folks. I just want to say, in the afternoon of 1987, when you started buying shares, you didn't know for 3 days what you got.
Yeah.
I mean, I know it sounds like ancient history.
No, I think it's worth pointing out.
Lisa's agreeing it is ancient
that's why I worry about. No, this is why I worry about the P word, because it is so subjective, and I think it's important to put numbers on it in the way that you guys are doing. Gina, it's fantastic to see you. Gina Martin Adams of Bloomberg Intelligence weighing in on these markets. And these markets have been brutal. No matter what side of the trade you're on over the last couple of weeks, you get whipsawed. Yields down today by 18 basis points. Just a remarkable situation when after a couple of weeks of moves like this, you become desensitized to treasuries moving 18 basis points either way. I don't think we should be desensitized by this. These are real moves, Tom, and they're massive still. Down 18 on 10s, down 17 on 30s, down 11 on 2s.
I would say they're massive but orderly, is how I would put it.
You would say, I think we've had some disorder.
I would agree with that.
Over the last couple of days, Tom.
Even in the Treasury market, actually, particularly the Treasury market.
Do you realize as you talk, we're going down to new lows on S&P futures? You are pushing the market down with your gloomy phrase.
Down 4.9% from New York. This is Bloomberg Radio.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
Delayed at the dentist, and now you're late for school pickup. You need a free now. Need to take the dog to the vet before lunch. Should have gotten a free now. Trying to get 4 kids and their baggage to the airport. Free now. Sometimes you can't get from A to B fast enough. Download the Free Now app today for quick pickups and reliable drivers, no matter the situation. Less hassle, more hustle with Free Now.
I'm Captain Obvious, and every day people book trips on Hotels.com that you will later hate like. A hate like is when you like Becky's picture of another waterfall even though you kind of hate it because she's there and you're on the train next to a mouth breather. Don't hate like Becky's trip. Book your own with Hotels.com. Hotels.com. Be there, do that.
And with 2 minutes left, Rovers are taking off Simpson and bringing on their new 58-year-old striker, new owner and recent Euro Millions winner, Gavin Mason.
This Friday's Euro Millions jackpot is a massive £47 million. That's dream come true money. Euro Millions from the National Lottery. Your numbers make amazing happen. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
Yeah, so I want to upgrade to, like, the latest phone you got. Okay. All right. But, like, for an unbelievably good price? Yeah, and I want it where I could choose the length for my own contract. Yeah!
On O2, you're our headline act, which is why you can get the phone you want for less per month with a custom plan on O2.
Minimum upfront cost. Direct only. Device plan of 3 to 36 months. Refresh credit by Telefonica UK Limited. Terms apply.
Fillet of fish from a dish. Share box and evening frocks. Big Mac down a cul-de-sac and even under a drying rack. Veggie deluxe and power cuts. Medium fries in rainy skies. Or maybe cheeseburgers in the bath. How daft. Wraps through cat flaps. Nugs on rugs. Or perhaps a McChicken sandwich to the river. Because now we deliver. Download Uber Eats and enjoy McDonald's at home. At participating McDonald's, see mcdonalds.co.uk/McDelivery to see if there's one near you. Serving times and delivery fee apply. See Uber Eats app.
Do you do the same thing every weekend? You know, meet up with the same friends for brunch, browse around the same shops, eat the same Saturday night takeaway. Mine's a lamb balti with mushroom pilau rice. Snuggle up next to the same person and watch the same brain-numbing reality TV. Then maybe it's time to switch it up. Starting with the all-new Vauxhall Corsa, with its bold styling and up to 70 miles per gallon. To switch it up, visit your local Vauxhall dealership or search New Corsa. Official WLTP test figures for comparison purposes only. Real-world figures may vary.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
First time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
We are being taken out of our comfort zone by the coronavirus.
Dollar weakness is pretty much a good thing for a lot of the rest of the world.
Finance.
We are going to see a global demand contraction this year, most likely, for oil. The financial health of the business sector has deteriorated somewhat.
Investment.
Obviously, the value in high vol stocks are going to continue to suffer.
It looks as though the bond market is talking itself into a recession here.
Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz on Bloomberg Radio.
Good morning, everyone. John Farrow and Tom Keene with Lisa Abramowitz. And all you need to know is in the next hour, and I'm going to call it 45 minutes, there will be a clearer vision of central bank action. Widely presumed with daylight savings time shift, the Fed in the ECB in 45 minutes, and then on the ECB to that critical Lagarde press conference. The market's pricing that in this morning, and some people looking for Fed action as well. Of course, John, after that moment for the Bank of England yesterday. John, let me have you start with a data check. What I would suggest just to begin in the last 10 minutes, we've seen tape deterioration.
Equity futures have been limit down. Where we are right now, negative 4.89% on the S&P 500. In your bond market, Treasuries with a bid, yields lower by 16 basis points on a 10-year maturity. Your yield 0.71%. In foreign exchange, all attention on euro dollar in 44 minutes when that rate decision drops from the ECB. Right now, 112.45. But what a range over the last couple of weeks or so. A break of 108. Almost a break of 115, and now somewhere in between.
Yeah, the German 2-year, we had again a negative 1.000 print. Right now, a little bit above that breach, but greater negative yields in Germany. I would point out gold hasn't gone higher as many would expect. 16.33 an ounce with oil weaker this morning.
So the question, Lisa, how can the ECB surprise to the upside when many people expect so much from President Christine Lagarde over the next couple of hours?
Yeah, and I think that the focus is really going to be less on the rate cuts, the deposit rate cuts, but rather on what kind of TLTRO response they're going to have, what kind of lending response. I do want to just say, though, that very much my question is, what are the central banks going to do about the actual functioning of markets? I mean, over in Europe, it's one thing. Over in the U.S., you were talking about these massive gappy moves in treasuries, the most liquid bond market in the world. Yeah. And I will say this comes at a time that the virus is disrupting basic operations for even the banks, where people are actually having to split up and set up new systems in different locations. Right. And there are questions about, whether these trades are working in the same way that they did, say, 2 months ago. And I think this is a very important question, and an important question for all of the central banks to address, since this is their fundamental function as well.
The distinction is they will provide assistance while allowing participants to take losses. That's a huge difference here between the more macro view. The macro view is everybody wins. I called it central bank T-ball yesterday. Everybody gets a blue ribbon as we move forward. That's not the way the short-term paper market works, John.
Well, I mean, just to pick up just quickly, to that point, there is a difference between everybody wins a prize and everybody gets money. And we need markets to function in an orderly way so that people can get their trades through and they don't panic, but they still may lose money. Markets may still go down, John.
We need some confidence, and we need to get the confidence back quick. And I've been saying over the last couple of weeks, you see the big whippy moves largely off the back that there is no confidence. In a low conviction, low information world with little confidence in officials to stabilise the situations, this is what you're left with. And it's not just a situation with the administration, it's a situation with Europe and the rest of the world as well. In Europe at the moment, I've got to say, I feel for the ECB. They can put as much pressure as they like on fiscal authorities. Yes, Europe moves so slowly. Translate
slowly. This then. Wolfgang Munchau, with one of the essays of the week in the FT, talked about how Germany just simply can't move. He mentioned some, Wolfgang Munchau type things. How do you interpret Chancellor Merkel's approach here, which was a complete about-face over 72 hours, folding into Bundesbank's support of Madame Lagarde?
There's a debt break in the constitution in Germany. For them to break that, they need to take it out of the constitution. I think they need 2/3 of a vote in both chambers, if I remember my German politics correctly. So that's the situation over in Germany. So you've got to get through that stage before you go ahead and start spending a load of money on some of these big fiscal efforts. And this has been the problem with institutions over in Europe through the last 10, 15 years and through the crisis too. I'm a little bit more confident now relative to where I was 10 years ago with Europe and the ECB, because the ECB now functions as a proper central bank. It also has the tools, the exact tools, the precise tools to deal with this situation in a way that actually maybe the Federal Reserve doesn't. Might not have much space on the rate side, but it can do things with the lending facility. It can buy credit. It can even buy credit in the primary market. That's a big thing that the ECB can really get down to in the next couple of weeks.
I want to frame Euro Swissy, and of course the Swiss will be watching what ECB does. For an American audience, good morning Boston, New York, Washington, good morning San Francisco. We thank Global Wall Street on the West Coast for their early morning hours. John, Swissy has confirmed this tension today, breaking down to new Swiss strength. I'm going to go to five digits here because that's what the Swiss do. 1.05494. Do you like that?
I do like that.
We're doing scientific notation.
Nice.
If we go back to Dow 10,000, we're moving to scientific notation. That would be 1.05488 on a strong Swiss franc. All you need to know, I'm kidding, folks, a little levity here. All you need to know in translation is havens are confirming, even if gold doesn't this morning.
Yeah, let's bring in Dan Cassiv, shall we? BNP Paribas head of FX strategy North America. Dan, let's talk about it. In 2014, when the ECB brought in negative interest rates, it had nothing to do with getting the cost of borrowing down. It had everything to do with attacking the FX channel and getting a weaker euro. Do they reach for that lever again today?
Well, we think they're going to cut their deposit rate a bit further. It's incremental at this point, 10 basis points, not a huge move, but I think they have to be seen to be doing something, and it certainly may not make everything better immediately, but it could help things from getting a lot worse. So, there's going to be action from the ECB today, very likely.
What's the big dynamic that's driving euro dollar at the moment? We saw the big reversal. Risk aversion kicks in. The trades have to be reversed. The money goes home. Phase 1. Phase 2, rate differentials aggressively tighter. The euro gets bid. Are we sticking with phase 2 for a while? How much longer has that trade got to go?
Well, I'd almost say there's three phases. There was the move down to 108, which you mentioned earlier, which was early in the crisis as the market said, Europe's exposed to China. Europe growth is going to be hit much harder from this. ECB is going to be stuck negative for a long time. Then we saw the big squeeze up to 114, 115 area, which reflected Europe's surplus economy status. Basically, it's an economy with a huge amount of exposure to FX, overseas markets, overseas bonds. That exposure hasn't been hedged for a long time because yields are very low. And when volatility goes up and hedging costs come down, as they have done, the euro tends to strengthen, very similar to the yen. This latest price action is interesting. It could reflect some anticipation that the ECB is going to act today. It may be part of that. There's also perhaps a bit more concerns about scarcity of dollars at this point as we get more locked down in financial markets.
I mean, the Bloomberg Financial Conditions Index, folks, and I'll put that chart out across Twitter and LinkedIn later. We're not to Lehman lows, but nevertheless, it's very extended, a number of standard deviations out from anything normal. How does the financial system assist in a scarcity of dollars? How does that work? How do we solve that problem?
Well, the Fed's already providing a tremendous amount of liquidity, and they increased repo operations yesterday, and in part in their statement when they did it, saying this will help provide sufficient liquidity as just paraphrasing, as market participants move to contingency plans, etc. There's central bank swap lines in existence. If you start to get scarcity of dollars in one spot that can't be accessed that can't access Fed directly, they do have the central bank swap lines that can be used. So there are mechanisms in place that weren't there early in the crisis in 08, 09. That's how you deal with it, and market knows that those backstops are there.
Dan, as you were mentioning, we are seeing a bit of euro weakness ahead of the ECB meeting with the expectation that they are going to cut their deposit rate further. I'm wondering, how much longer will this work, that cutting rates necessarily leads to a weaker relative currency, or at least prevents strengthening?
Well, I guess it's more, the question is, does it work, or does it just prevent things from, work in the sense that it doesn't make things better, but in the sense that if you don't do it, it'll make things worse. So the liquidity provision that the Fed has done, maybe it hasn't solved everything, but if it hadn't happened, things would be much tighter. And I think similar thinking on the ECB side, if they don't join the global move towards easing, they're going to have tighter conditions at home. They could have a stronger currency depending on the market dynamics, and things would be on net a little bit worse than otherwise.
Is there a lower limit to that, as far as how low they can cut rates at a certain point where it doesn't have the same kind of feedback loop?
Well, I think they've already assumed that they're close to the lower limit already, and I think the thinking coming into this year was that they were at the lower limit on rates. But there's always a little bit more incremental room, I guess, and just I think want to show that there's taking the situation seriously and able to act. But that you can't price in 100 basis points of easing from here from the ECB as you could for the Fed, for example.
Hey Dan, great to catch up with you this morning. Big morning for everyone, I think. Dan Katzif, BNP Paribas head of FX strategy here in North America. Euro dollar going into this decision. Euro dollar 112.47. Weaker on the session, but just stronger. Just a little lift over the last couple of minutes.
And to be clear, we're 40 minutes from the decision. Right?
So in around about 35 minutes, we'll have the decision. Then 45 minutes after that, we'll have the news conference over in Frankfurt.
I want to make clear, SPX futures we can't see, they're locked down, but the ETF that trades pre-market has, I don't want to oversell this, but it's rolled over a little bit is how I'd put it. Fractionally rolled over, down 5.2%.
I want to just bring you this news crossing the Bloomberg. The JP Morgan is planning to implement a staggering work from home plan, basically telling all of its New York employees to work from home. And it just goes to the question about the functioning of markets as some of the largest banks, Citigroup splitting up some of its staff, JP Morgan telling its employees to work from home. You just wonder operationally, how will that challenge the system?
Okay. I'm so glad you brought this up, Lisa. I mean, it's a staggered work from home. Medically, how does that work?
One group at home, the other group in the office, then they rotate. This according to people with knowledge of the matter. So this isn't official from JP Morgan Chase yet, but that ultimately is the reporting that we've got here at Bloomberg.
What do you do? Split them between, well, we think they have the virus and we think they don't have the virus? I mean,
they split you and me up. That's the first thing they do.
Coronavirus. We fly different airplanes to Davos.
You on the East Coast, me on the West Coast.
I like that you picked the West Coast.
Wait a minute.
You picked an
let
island.
me translate this, folks. This is me on the East Coast and John at the bar of the Sunset Grill.
Maybe something like that.
Something like that as well. Let's get to the news right now. Futures negative 140. Here he is, John Tucker.
Well, President Trump's address from the Oval Office, Tom, last night appears to have done more harm than good, at least as far as investors are concerned. Referring to a foreign virus, he blamed allies for not adopting tough immigration measures, overstated European travel restrictions, and said U.S. health insurers had agreed to waive co-payments for coronavirus treatments. A health insurance trade group said its members had agreed only to waive co-payments for testing. Governor Cuomo of New York announcing the St. Patrick's Day parade won't take place next week. Tom Busby has more on that.
Because of coronavirus concerns, for the first time in its 258-year history, the parade won't happen on St. Patrick's Day. The postponement of the March 17th parade adds to the roster of events and holidays upended around the world by the spreading infection. The New York parade, honoring Irish heritage, dates back longer than the United States itself and draws tens of thousands of marchers and throngs of spectators to Manhattan's Fifth Avenue. St. Patrick's Day parades in other big cities, including Chicago, Boston, even the Irish capital of Dublin, were called off earlier this week. Tom Busby, Bloomberg Radio.
And Oscar-winning actor Tom Hanks and his actress wife Rita Wilson have also tested positive for the new coronavirus. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Tucker. This is Bloomberg. Jonathan.
John Tucker, thank you, sir. S&P 500 futures have been limit down. We're down 5% there and thereabouts. If you go to the Spider S&P 500 ETF in early trading, pre-market trading, down a little more than 5%, off by 5.23%. From New York City,
Why is delivering the best client experience a top priority at BNY Mellon's Pershing? Michelle Feinstein, Director of Client Engagement, explains.
Today's investors want a financial relationship that's on demand, customized, and leverages the latest digital technology. At BNY Mellon's Pershing, helping advisory firms and broker-dealers create great experiences for their clients is our priority. Through our integrated wealth experience, we give you a high-touch service, flexible technology choices, and expert insights, so you can deliver a highly personalized experience to your clients at every step, from onboarding to wealth planning, to performance analysis and more. And because we're part of BNY Mellon, you'll benefit from more than 230 years of strength and stability. At Pershing, we're personally invested in your success.
Visit Pershing.com to learn more about Pershing's integrated wealth experience. Pershing LLC and Pershing Advisor Solutions LLC are both members of FINRA and SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Influential conversations from Bloomberg Television. Here's Emily Chang.
Facebook, the social network that CEO Mark Zuckerberg says is supposed to bring the world closer together, is starting to feel the effects of the virus itself that is forcing the world to stay apart. Joining us to discuss this and much more about the social network is journalist Stephen Levy, who is the author of a brand new opus on Facebook called Facebook, The Inside Story. Stephen, always good to have you here on the show, and congrats on the book. Now, a lot has been made of you getting unprecedented access to Facebook employees, to Zuckerberg, to Sandberg. It makes for some incredible color, but you wonder if that access came with a level of bias towards the company. And how do you respond to the criticism that this isn't the inside story, this is Facebook's side of the story?
Right. Well, there were...
Night is still young, but a little late to get into the wrong ride, don't you think? That's why I choose Ola. With secure start codes unique to every user, there's no way anyone can ride a car that's meant for you. Good night.
Ride the change with Ola. Download and sign up now and get up to £15 vouchers. Terms and conditions apply.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Less than 90 minutes ahead of the trading day, we are looking at an ugly open to start. We are looking at limit down several times breached. S&P futures now down 5.1% to 139.50. Meanwhile, Dow tumbling 5.25%. And you're looking at stocks in Europe down more than 6%. If you take a look at what's going on in the bond market, unlike yesterday where we saw bond yields going much actually higher, we are seeing bond yields aggressively lower. 20 basis point move on the 10-year to 0.67%. 30-year yield down 18 basis points to 121. Meanwhile, over in the foreign exchange market, you are seeing the peso tumbling to the lowest level on record versus the dollar, tumbling almost 5%. Gold losing value with the question of sell what you can, not necessarily what you want to. And that is a Bloomberg Business Flash.
Lisa, thanks so much. Futures negative 140 on a lockdown, and they have been locked down. Other things are not, John. To turn to the screen, John, and I can tell you one of my great missed calls, I was totally wrong on Lula in Brazil a million years ago. To see a fort print on Brazilian real is extraordinary. Moments ago, 5.00 weaker Brazilian real. At some point, it breaks.
Dollar Mex, Tom, with a 22 handle. The Mexican peso around about 4 or 5 percentage point move.
weaker Mexican peso, unreal.
Just because of time now and the importance of this next guest, we're going to go away from the data again. Futures negative 140. There are always in every crisis analysts that jump out of the screen. George Saravelos is one of those. He's at Deutsche Bank. He writes blisteringly short, sharp notes. Moments ago, George, in your theory that the central banks are too slow, in Trumpian capital letters, you gave a list of what Lagarde needs to go. She needs to go all in on liquidity. Translate.
Hi, Tom, and thanks for your kind words. So I think it's three things really Lagarde needs to do, because the markets are breaking down as we speak, and we're living through some pretty existential moments. The first one is to provide a clear backstop to Italy to signal that the ECB is going to be unwilling to watch the Italian bond market unwind in the midst of what is essentially a natural disaster. The second thing is to move away from this policy of aggressive negative rates to signal that we're approaching the lower bound, because if you look at what's happening to European markets today, very long-end yields are collapsing, and this is creating financial stability issues for pension funds and insurance companies, for example. And the third thing is liquidity. The credit market is in breakdown, so she needs to find a way to improve market functioning there. The easiest way to do that would be to increase the amount of credit purchases, and also to provide very cheap funding for lending to banks that can support all the corporates that are in distress. So those are the three things.
George, let's pick up on one of them. Backstopping Italy. Are we about to hear the old acronym OMT? Am I going to hear a lot about that in the news conference? For our listeners that don't know what that is, just walk us through it.
Well, I hope we don't, because OMT is all about a fiscal program when there's fiscal distress relating to finances blowing out because of irresponsible governments that then have to tighten back their fiscal spending, and then OMT delivers when the governments do that. This is an entirely different situation. We have an external shock, a natural disaster. Lagarde is calling for greater fiscal spending across Europe. So the relevant analog here would be essentially unconditional purchases not related to fiscal tightening, but related to fiscal easing. So I would say what would be more relevant is, for instance, the securities market purchase program, which, remember, was before OMT. That was targeted to specific countries. So she needs to signal they're willing to defend Italy and to accommodate this increase in fiscal spending because of the natural disaster.
George, just because of the short time we've got with you today, I got to go back to something you said that's hugely controversial. Do you understand in your research note this morning that they need to finally end the negative rate experiment? How does she do that? How does she affect to command European finance to stop what many consider a busted theory?
Well, she has to stop saying that interest rates can keep going down. I don't think we're anywhere close, of course, to rate hikes, but at the moment the market continues to price more negative interest rates, and yields in the long end are collapsing. So the only thing she has to say is we're approaching the lower bound, and we're recognizing that further declines are damaging the financial system.
George, you said something else that I thought was really important. You said credit markets are breaking down. Can you elaborate on that? What exactly are you talking about?
So credit markets, it is very easy to buy a corporate bond when they are functioning well, but when people are trying to exit from these positions and there's large amount of supply, it's very difficult to find buyers. So essentially liquidity is breaking down. It's very difficult to clear the market, and we need a buyer of last resort in the credit market to allow for some of these portfolio unwinds to take place that were encouraged in the first place by the central banks, which have been pushing investors into these less liquid assets.
George, are we actually seeing portfolios being unwound right now?
Absolutely. If you look at the portfolio flow data, you're seeing some of the largest unwinds or outflows in credit and emerging market that we've seen for the last decade or so.
George, great to catch up with you. George Saravelos there, Deutsche Bank, Managing Director, Head of FX Research. Just to get you up to speed on what's happening in the equity market, we roll over again session lows on the S&P 500 Spider ETF in the pre-market because we are limit down on equity futures. That's where you get your insight, your read, your glimpse of where we are in the equity market. That particular ETF is down by 5.63% in pre-market trading, Tom. And since the president came through with that address in the Oval, it has been a steep drop from 9 Eastern yesterday evening all the way through the morning.
I'm glad you bring this up again, 19 minutes away from this important ECB decision. I really want to stay away from the politics, those pro-Trump, those anti-Trump, et cetera, et cetera. And I just want to say, John, that the market reaction off the president's speech was immediate. There was no 20-minute, 2-hour navel-gazing. It was boom, disappointment.
Yeah, I've been very reluctant over the last 4 years, as you guys know and many of our listeners know, to criticize the administration at any given opportunity. So many people have made a business out of doing that.
It's a cottage industry.
I don't want to know about that. This isn't about the president's delivery. It was about the content. There was some real confusion. There was at one point in that particular message addressed last night, Tom, where he said that maybe cargo coming out of Europe would be banned as well. And then the White House had to issue a correction and say that wasn't a fact. And I just think that really spooked a lot of people.
Do a data check here, John. Keep us going. Oil, 31.06 on American oil.
Equity futures have been limit down through much of this morning. So on the S&P 500, your read comes from the Spider ETF S&P 500, which is negative 5.56% in the pre-market. Much more still to come. 20 minutes out from an ECB decision out in Frankfurt with President Lagarde. From New York, this is Bloomberg Radio.
Hey, y'all. Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Night is still young, but a little late to get into the wrong ride, don't you think? That's why I choose Ola. With secure start codes unique to every user, there's no way anyone can ride a car that's meant for you. Good night.
Ride the change with Ola. Download and sign up now. Enjoy no surge pricing until the 12th of April.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
for up to 50% off a choice of floors and beds, for an extra 20% off selected ranges. There's something for everyone. Carpet Right. For life. Offer ends Tuesday.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we are live on Bloomberg Radio, 15 minutes away from an ECB decision, 1 hour away from the market open in New York, with equity futures down and down hard. A headline crosses my Bloomberg. It looks like Europe's having a little bit of a go at coordinated policy action. Some verbal stimulus, at least from Germany, ready to ditch a balanced budget to combat the coronavirus. This coming 15 minutes away from the ECB rate decision. Interestingly, euro with a bounce for about 20 seconds, then back towards session lows. Euro dollar 112.23. Similar move on a German 10-year yield. Yields coming up just a little bit. Bunds pairing gains just a little bit, then rolling over again. Your German 10-year yield down 2 basis points on a day, negative 0.766%. Your data point in America, its initial jobless claims, and over the next couple of weeks, it will get increasingly important. Right now, I think many people might consider it a little bit stale, but let's get that data. Nevertheless, here is Vinny Down-Judice.
Yes, Jonathan, businesses going into a state of suspended animation in many industries, but jobless claims last week down by 4,000 to 211,000, one of the lowest in a half century. Like you say, maybe a little stale. Inflation, forget about it as far as the producer price index, down 0.6%, excluding food and energy, down 0.3%. We see a 3.6% drop in energy, food down, all across the board, negative numbers. Quickly, one thing to be grateful for today with the market swooning. Let's look back to 1918, the Spanish flu, the military clamped a censorship on it. People didn't know about it. People died. Today, information is flowing freely. That's something to be grateful for. I'm Vinny Down-Judice, Bloomberg Radio. Let's go back to New York.
Vinny, thanks so much. Greatly appreciate that. I'm just going to say quickly here on the economic data, as John mentioned, it's old data. And critically, John, the revisions were flat, non-news. And that I'm not going to say it moved the market in any way. We need to recapitulate what a lockdown is. On a percentage change, they stop SPX trading. The futures have been locked essentially at 140. The VIX has been locked at 62. These are common features that we look at on quiet days in August. Today is not quiet. We're watching the yield market carefully. More than anything, and this links into ECB, John, what is it now, 13 minutes away, is a 2-year German yield, a negative 1.016. That's the one tea leaf I'm looking at.
Anchored by aggressively low policy rates worldwide, particularly in Europe at around about negative 50 basis points on the depot rate. We need to get high yields at the long end. To do that, you need some kind of circuit breaker that just re-inspires confidence about the future in growth and higher inflation expectations. And right now, Lisa, we don't have any of that.
No, I'm really struck by the idea that everybody says that lowering the deposit rate further into negative territory will do nothing. That nobody is actually saying that this is going to stimulate anything other than keep the euro from appreciating too much. And to me, I think this is really important. They're doing it because they're not sure what else to do at this point. And it raises a question, if history is going to be some sort of judge, how they're going to judge that, given the fact that we have not gotten any kind of confirmation that this is actually helping the economy.
She has public service to her Europe with the European Commission. Sarah Hewen joins now. She's a chief economist and managing director, Standard Chartered Bank on the Americas and on Europe as well. Sarah, what will you listen for in 11 minutes?
Well, it'll be, is it a rate cut? Are they going to expand QE? What are they going to do to support businesses? Could that be changing the terms of the telcos? I think those are the three main. Secondary interest will be how far do they lower their growth forecasts? Europe to us looks as if it's at risk of going into recession. Is that going to be confirmed by the ECB's own forecast?
Would you suggest that after what we saw from the Bank of England and the ballet there between institutions, that we'll see a balletic institution today and the idea of coordination with the Federal Reserve of the United States?
I think they've had an opportunity to do that previously, and they haven't really taken that opportunity. So it still seems to be, every central bank for itself at the moment. The ECB obviously has its own set of constraints. They can't cut rates in the way that the Fed has, or even in the way that the Bank of England has. So they have to really look at what they think is going to be supportive to the economy, and at the same time is not going to disappoint markets too much. I don't think any policymakers believe that a 10 basis point rate cut to the deposit rate is going to do any good, and may do some harm, but they probably feel as if they're going to have to show willing, as it were, to stop an adverse market reaction.
Sarah, markets have moved quickly, and I think many investors would like to see a faster response from policymakers. Just to bring you that news that came out around about 5 minutes ago, this is from our reporters over in Germany. According to people with direct knowledge of the government's economic policy, the threat of an economic recession from the pandemic means that Chancellor Merkel and her team are now willing to accept deficit spending. As we know, though, Sarah, these kind of things take a long time to put together. We're not talking about going out tomorrow and starting to spend. It could be weeks before there's even a plan that they can think about deploying. How quickly can they move?
I disagree. I think that they can move quite quickly. You just send out a message to say that you're expanding the Kurzarbeit scheme, that you are going to ensure that businesses, are given some sort of a break such that they don't face, severe disruption or severe harm in the event of, the economy seizing up. So I think there are a number of things that you can put into place quite quickly. It has to be targeted. If we look at what happened at the time, for example, the global financial crisis, then you saw sort of VAT rate cuts to try to stimulate spending. Actually, people are just not going to be going out and spending now. So it does seem to be more a case of what can you do to ensure that businesses don't go bankrupt. I
agree you can signal you're going to act quickly. I just kind of disagree that you can act quickly, Sarah, because as you know, in Germany, you need to take the debt break out of the constitution. That requires a vote. They've got to get parliament together and do that. Then they've got to put a plan together. Before that first euro hits, to actually stimulate the Eurozone economy. This is what I'm getting at, Sarah. The Germans can come out today and say we're going to do it. They can signal. But how quickly can they act?
I think the Schwarze Null is so the debt break is the constitutional limit. The Schwarze Null is a sort of government commitment, and we know that they've been running budget surpluses for the last few years. So I think that there is sort of scope within, within the current constitution to be able to provide more of a stimulus. The resistance, to my mind, has been on the political front, that actually you've got people in Parliament, ministers, who just don't want to go that route. They're very nervous that actually, the government spending is not the answer. Things have moved on, though, very dramatically just in the past week, in the past couple of days, in the past 24 hours, as we know. Right. So, those sorts of sentiments are changing.
We welcome all of you worldwide and, of course, coast to coast on Sirius XM Channel 119. John Farrow, Tom Keene, Lisa Abramowitz here. It has been a series of special days. We're now 7 minutes away from what will not be a routine set of ECB decisions. We're in SPX lockdown with the SPY, the ETF, rolling over sharply through the lockdown about 10 minutes ago. We're down about 5.3% on the ETF futures. The 10-year yield 0.68% in a solid 19 basis points. And Lisa Abramowitz, I would note oil printing 30.94, down $2 on West Texas Intermediate.
And oil really being a gauge of people's lower expectations for growth going forward, regardless of what happens. Sarah, I remember 3 weeks ago we were talking about how this was likely a temporary shock. That is what one commentator after another economist came out and said. How confident are you that this will be something that is temporary, even if it's 6 months, 12 months, rather than setting the course for the global economy for the next, say, 5 years going forward?
I think it is temporary. The risk is that you get a sort of broader reaction via credit markets, via financial markets, and if the authorities, the central banks and governments are unable to prevent that, then you start to sort of run into more difficulty. But we can see from China's experience that the sort of virus plateaus at a certain point, and presumably cases will start to decline. So I think we're looking to a temporary, but it could be, temporary could be longer than a month, longer than 3 months.
Sarah Hewen, thank you so much. She is with Standard Chartered Bank. John, I got a special guest to frame out the markets as we go 4 minutes away to the ECB decision.
He can take us deep inside the market, particularly with what happened in Treasuries yesterday. Cameron Christ joining us now of Bloomberg. And Cameron, fantastic to have you with us. You and I were going back and forth on the range of reasons as to why Treasury yields were high yesterday. You offered me a really interesting example as to some of the forces behind that move. Just walk us through that technicality, the technicals that were playing out yesterday.
There are a whole host of moving parts here, John. The thing that's characterized this week's trading, and particularly yesterday's trading, that isn't obvious by just looking at the equity market, is it's been complete carnage in the fixed income relative value space. Now, this is a strategy that essentially buys one security, sells another that's closely linked to it to exploit a small price difference. And you're betting that price difference is resolved, and you sort of clip the coupon and profit the difference. These price differences are very small, so you have to take enormous leverage to make it profitable. And it works very well in normal circumstances, but it's inherently a short volatility strategy because you're relying on essentially a stable relationship or a stable volatility of the relationship between these two securities, and that has clearly gone out the window. So a popular trade has been bonds, owning cash bonds versus selling bond futures, for example. That's blown up. The liquidity premium of on-the-run treasuries versus off-the-run treasuries has blown up. TIP securities, as you typically see during these sorts of environments, yields have risen very, very sharply over the last couple of days on TIP securities. So there's a whole business, a whole industry that is under exceptional duress, very much like we saw in 2008 and in the long-term capital crisis of 1998.
Cameron, are we seeing a logical unwind of some of these trades, or are we seeing the functioning of markets? We should say, just to bring you some breaking news, John, the ECB is planning to let banks run lower capital ratios due to the coronavirus.
Yeah, this is coming from the supervisory board from the European Central Bank just before the rate decision. So letting banks run lower capital ratios, and just off the back of this, seeing some banks with a little bit of relief in the equity market. Looking at Commerce Bank this morning, still down 5% on the session, but off-session lows at least. The kind of things you can do on the regulatory side, Tom, going to be interesting to see how they support them on the monetary policy side in 3 minutes' time.
In the litmus paper, the euro breaking down 112.10. I don't want to make too much of it. It's been on a slide since 4 a.m. But with that big headline across the Bloomberg terminal to global Wall Street, the bid gives way on euro, a slightly weaker euro, John.
3 minutes out then, 2 minutes and around about 10 seconds to be precise. Let's just go through your expectations, Cameron. How do we supplement some of the efforts elsewhere over on the monetary policy side on the Governing Council today?
It's the ECB is actually fortunate insofar as they've got a bit more flexibility than the Fed. Not on the interest rate side. I suppose they can lower the deposit rate. That's not going to make any difference. They can increase the ratio in terms of tiering, so allow banks to put more money to the ECB at a zero interest rate rather than the negative deposit rate, which will improve some sort of cash flow of the banks. Maybe they increase QE in terms of government bonds, lowering the capital key or changing the capital key so that they can buy more of each government bond market. But what they can really do potentially is buying corporate bonds to help ensure at least to some extent, the ongoing functioning of the credit transmission mechanism in Europe. The Fed doesn't have the ability to buy non-government guaranteed bonds, which is a challenge, I think, for the next few months here.
Cameron, let's you get back to work. It's going to be an important moment here in less than 1 minute. Cameron Christ, of course, working with Bloomberg Markets here, synthesizing all this together. My observation, John, just as simple. Dollar strength, and that's not what the president wants.
Euro dollar right now rolling over just a little bit. We are about 40 seconds out from that ECB decision. 112.18 is where we are. The range over the last couple of weeks has been very wide. A break of 108 briefly, and then pushing 115 briefly too. Right now, as I say, 112.14. In 30 seconds, you'll get a rate decision from the ECB. You might get some guidance as well on lending programs. You might also get some guidance on the asset purchase program. 3 focuses for me, Tom, going into this one.
And not just a rate decision. I think we really need to emphasize in the history, going back to Wim Duesenberg, this is a huge deal. I mean, this is not trichet. It's not even, I think it's got a different character than the moment of 08.
Very early in the career of President Lagarde over at the European Central Bank. In the same way for President Draghi when he took over, he had to act fast. And many people think President Lagarde is going to have to act just as quick as she sits down for that decision today. The news conference will come in 45 minutes' time. That decision will cross the Bloomberg any second from now. Remember, the depot rate going into this was negative 50 basis points, and right now that's where it stays. The depot rate unchanged at negative 50 basis points. The marginal lending facility changes unchanged rather at 25 basis points. The main refinancing rate 0%, so unchanged at the moment. A new Altro is announced over at the ECB. Rates unchanged, but a new lending program is announced at the ECB. I do not have the details on my screen right now, but I imagine that's going to be to provide immediate liquidity support. They are the measures they announced. The price action that I'm seeing on my screen is a German 2-year bond yield that pairs the drop after this ECB decision. The euro getting back to unchanged on the day. So your decision so far, rates unchanged. They also boost QE, and they are introducing some liquidity tools as well. So all of these headlines started to come through. They are going to go through with a deposit rate that remains unchanged. They're going through with some liquidity tools as well, and boosting QE. Just some of the announcements I see on my screen, guys.
What's so important here, and this is with stronger euro immediately, I want to show the euro 112.10 out to 112.56 with a spike up, and we'll really see how that plays out. But the partition here, John, is less rate movements and more policy movements. And to borrow a phrase I'm going to suggest from Nora Rubini, but from others, it really is. We're in an era of QE infinity. I mean, just what number are we? Deux, trois, quatre, cinq?
I will say, though, actually, I got to say this is actually really smart on their behalf, because every guest that we've had on this morning has said that lowering benchmark rates is not going to actually stimulate the economy at this point. It would just be a euro play. They're basically having a de facto acknowledgement here that it's not going to do anything to lower anything, raising questions about whether this is the lower bound, basically. You are seeing 2-year yields climb a little bit in Germany, but really talking about targeted action here, actually extending liquidity to companies that may run out of cash as people fail to go to their businesses.
Just a little bit more clarity on the additional buying. This is quite important. The focus will be on private sector buying. So this won't be on the sovereign side of things. This will be on credit, I think, and that's where the focus will be. I imagine we'll have a lot of questions about this at 9:30 Eastern, where President Lagarde walks into the room. So it's going to buy 120 billion euros in bond purchases, and there will be an emphasis on private sector buying. Just some of the numbers coming through the screen.
Are they crowding out a European system flat on its back? Let's call it recession. Maybe it's not recession X the virus.
Yeah.
But when you do that, you crowd out. I mean, when the Swiss bank buys Apple shares, they're not crowding out the global market.
No, there's been some criticism
but there's going to be some crowding
of
out.
The buying. There may well be, particularly on the sovereign side, but it's important on the credit side that this is where they want to target this particular program. The new lending program called the Tautro 3 measures, that's to support SME lending. This is what we've been talking about.
Businesses.
Small and medium-sized enterprises. Support the lending, give the banks an incentive to lend to them. And the bond buying program, an additional 120 billion euros of net asset purchases through the end of 2020. And that focus will be on the private sector buying. Just a note on the Tautro 3, the rate will be 25 basis points below the average main refinancing rate. So Get rid of all the jargon. That's an incentive to get the banks to lend to some SMEs at a time they're really going to need the funding.
One of the key questions for me with respect to buying corporate bonds will be, will they go below investment grade? Are they going to start buying high yield bonds in the Euro region, or is it just going to be, Tom, sticking with the investment grade universe? But I will agree with you that this sort of does raise a question of crowding out. Who are you crowding out at this point when a lot of companies can actually borrow or actually be paid to borrow money and actually issue bonds with negative yields effectively?
The most important litmus paper, the Euro 112.68. Let's bring in someone truly expert on this. He is with Citigroup, and that is an esteemed European program put together by Willem Bouder and, of course, by Catherine Mann as well. Christian Schultz joins with a very much European perspective. Christian, what is a surprise here?
Well, to us, not that much. Our focus was mainly on QE. We had hoped for a bigger increase in the purchases of government bonds in particular. And the logic here for us was this is going to be a shock to the real economy's equity. So companies are going to burn through a lot of cash. And that's not just a liquidity, but also a solvency issue. The ECB cannot give equity to companies. Governments can. So what the ECB has to do is make sure that governments can socialize losses, so create fiscal room, and that requires buying government bonds. Now, the fact that they're buying private sector bonds is a bit evasive, I'd say, there. So it seems that the limits that they've set themselves, the 33 limit and so on, have scared them away from buying more government bonds, and that's not good news.
Is this the influence of the Germans? I mean, are you suggesting there should have been more except for German reticence?
Well, the Germans, I guess, would have liked a rate cut. That's not happened, and that's probably not happened because the fear is that that would be worse for banks than it is good for the economy as a whole. So that it would be negative for the economy. It just highlights that we're at the limit for rate cuts at this point. For the asset purchases, yes, indeed. I mean, buying government bonds is not something which is very popular in Germany. Buying corporate bonds is probably more popular. So yes, indeed, there's some resistance there, it seems.
Euro Swissy stays stronger Swiss for those that are playing inside baseball. Lisa, we're starting to get in research, and Sebastian Galli at Nordea, he doesn't mince words about it. He says this shows a complete lack of coordination between the United States and the European Union.
Which really is the key issue here, is will there be sufficient response and coordination from all central banks in order to stave off some sort of serious crisis? And right now, there is a question that I have looking at this response. Is it sufficient? And Christian, what's your take? Do you think that the ECB has responded effectively to the issues at hand?
Well, within what they can do, they probably have. As I said, it would have been better to buy more government bonds, to be more aggressive on the government bond side, because that's really what we need right now. We need fiscal space for government so that they can socialize losses if necessary, and that includes countries such as Italy. If the additional purchases, which aren't great, I mean, I'm calculating maybe 12 billion or so per month, if that's geared towards the private sector rather than the public sector, then I'm afraid that sort of misses that point that governments have to have fiscal space here.
The phrase you just said, Christian, is why we love having you on. The ability to socialize losses. That's the heart of the financial political nexus. I should point euro strength all of a sudden. We did get a 113 print briefly, 112.78, slightly stronger euro here off this historic moment. Christian Schultz, what do you mean? Well, translate for us socialize losses.
Well, companies and also households, of course, will have less income, through that period where we effectively are in lockdown right now in Italy, but potentially in other countries shortly. So that will burn down the equity. The debt levels remain the same. So companies are running out of equity, and it certainly is difficult to get new equity from the markets right now. So they'll turn to governments for income subsidies, and not just for bridge loans, but literally for grants. And that requires bigger deficits. That's what I would call socializing losses. The taxpayer will have to come up for a lot of the companies.
There you go. That's what you were looking for, Tom.
That's what I was looking for, folks. He's so delicate about it. Christian Schultz is a gentleman. Lisa, this has been the conundrum for 12 years. Is it any creative destruction, however you want to put it. Good morning, Mr. Schumpeter, with the great memories there. But I'll tell you, Lisa, all this is in the wonderful language of socialized losses is when does the taxpayer pony up? That's really what this is all about.
And ultimately, it seems like that will be the answer. But there's also a question, what is the role of the central bank, right, in terms of making sure that financial markets function versus fiscal stimulus? Christian, based on what you've seen, the lack of coordination, as we've talked about globally between the central banks and fiscal policymakers, what are you looking at in terms of the European economy? Are we headed toward recession? Are we already there? How long will it last?
It seems very difficult right now to avoid recession if you have the definition of two successive negative quarters, or even if we do avoid two successive negative quarters, we probably have as much decline in one quarter that we can call that a recession by all means. So a recession, a widening of the output gap and rising unemployment rates and these things, I think that will be inevitable. Of course, right now the hope is still that we will have some form of V-shape or U-shape or any kind of recovery so that we get back to the levels that we had of output at the end of last year relatively quickly, in which case, the socializing of losses and the liquidity support from the central banks can be temporary. But of course, there's a big risk if we don't socialize losses that we get a permanent shock and a parallel shift in the GDP curve.
Hugely informative. Christian Schulz, thank you so much in economics in Europe with Citigroup. Just wonderful. The director of Citigroup economics team. There is just all sorts of important stuff within the data check today. It's really rich. I'm going to do this quickly because, Lisa, I've got to go to a headline that bears further scrutiny. First of all, futures locked down. We're down 5.3% on the ETF futures. Yields are in. The 30-year with a vengeance has come in the last 10 minutes from a 121 to a 1.17%. The benchmark 0.65%. I'd also note oil has broken down. Starbucks may limit seating, quote, to improve social distancing. That's, Lisa, why you and I are on the other side of this surveillance review.
We're improving our social distancing.
We're improving our social distancing right now. Stay with us this historic day. This is Bloomberg.
Mo Gilligan. There's Mo to Life Tour. See him live across the UK throughout October, November and December. Mo Gilligan. Get your tickets now from livenation.co.uk. Don't miss Mo Gilligan. There's Mo to Life Tour live.
Delayed at the dentist and now you're late for school pickup. You need a free now. Need to take the dog to the vet before lunch. Should have gotten a free now. Trying to get 4 kids and their baggage to the airport. Free now. Sometimes you can't get from A to B fast enough. Download the Free Now app today for quick pickups and reliable drivers, no matter the situation. Less hassle, more hustle with Free Now.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL Scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
Fillet of fish from a dish, share box and evening frocks, Big Mac down a cul-de-sac and even under a drying rack, veggie deluxe and power cuts, medium fries in rainy skies, or maybe cheeseburgers in the bath. How daft. Wraps through cat flaps, nugs on rugs, or perhaps a McChicken sandwich to the river. Because now, we deliver. Download Uber Eats and enjoy McDonald's at home. At participating McDonald's, see mcdonalds.co.uk/McDelivery to see if there's one near you. Serving times and delivery fee apply. See Uber Eats app.
This week on the New Yorker Radio Hour, we'll ask whether America is ready to elect a Democratic Socialist for president. Plus, the science fiction legend William Gibson on climate change and the end of the future.
How often do you hear the phrase, the 22nd century? Don't hear it. We no longer have that sense of cultural anticipation.
Listen to this episode of the New Yorker Radio Hour on TuneIn today.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn. When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
As of the close of business tomorrow, and the NHL is leaning toward following the NBA's lead in suspending its season in response to the coronavirus. Gina Cervetti, Bloomberg Radio.
They don't just talk to the most important people.
Can you give us your broad sense of the main driver behind the latest weakness?
They talk with the most interesting people.
When you talk to your clients, are they taking this seriously?
Lisa Abramowitz.
What's going to be the main driver of growth?
Paul Sweeney.
What did you take away from those Amazon numbers last night?
Bloomberg Markets.
Is it as ominous this time around?
Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
Once we get through coronavirus, it's very supportive and very stimulative.
Central banks themselves got caught hostage by markets.
Finance.
OPEC Plus is at war with itself.
We know we can create America's energy independence again.
Investment.
The market's anticipating the rate getting very close to zero in fairly short order.
Volatility is back, so that's going to make for more cautious trading.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. An historic day in economics, an historic day for the markets. Paul Sweeney and Tom Keene with you in this hour. Of course, Christine Lagarde, newly minted. I think the curtains haven't even been hung in the office in Frankfurt, and here she is with what we're going to see this hour, which is just as exceptionally interesting news conference. I want to make clear, because of daylight savings time, this usually happens at 8:30, and you'll see the Lagarde press conference here. Is that right, Paul? 9:30?
Correct.
We'll have it 9:30, and of course, all of Global Wall Street will hang on every word. We're just discussing it with our vast team here. We will give you the market opening, and we'll give you all of the dynamics of the market opening as we listen to Christine Lagarde. Karen Moscow's steeled to be really focused at 9:30 as we go to Christine Lagarde in Frankfurt. I just want to frame quickly here dollar strength off of the ECB announcements of 16 minutes ago. Euro gyration, euro 112.10 up to 113 strong, and now is weakened and really come back to a decided unched, if you will, on what we see with euro. Paul, what do you observe on the data screen right now?
Tom, just not good here. We're limit down on the U.S. equity futures. I think the speech by President Trump last night intended to calm the markets, did not get there, did not do that. So I think that the market was clearly looking for more substantial and more detailed response from in terms of fiscal stimulus for this U.S. economy.
And then they're looking looking at the ETF of the Standard & Poor's 500 locked down, shows a breakdown here. Let me get out the surveillance cursor and take you from some stasis to 845, and then we go down to a recent low here at about 857. I'm going to call that 5 minutes ago when we're testing that new low right now. That's not a good tape for the Standard & Poor's 500. What we've done, Paul, and we've been remiss on this, we've ignored the individual stock stories wrapped around what we're talking about, which is the virus. I mean, the shock of Mr. Hanks and his wife last night with a virus in Australia, and those that aren't celebrities, it's extraordinary, but it really affects over to companies as well.
Yeah, Carnival Cruise Lines, for example, Tom said they're postponing sailings for 60 days. So they're
that's a duration effect again.
Yeah, so they're basically kind of shutting down their business. Starbucks, Tom, is talking about kind of limiting seating within their restaurants for that individual spacing thing. So we're starting to see it.
They're doing social distancing like me and Lisa.
That's exactly right, you guys. And so we're starting to see it in that day-to-day business and starting to really touch consumers. We had the NBA last night with a really profound move, Tom, to suspend, at least temporarily, the remainder of the season. So again, lots of issues impacting consumers on a daily basis, just starting to really come to the fore here.
David Wilson now with some individual stock stories. David?
Well, I'll start where Paul left off, talking about Carnival now. That 60-day suspension applies to the Princess Cruises line. Current voyages will end as soon as possible, and the halt applies to all 18 Princess ships. You've got Carnival shares down 21.5% in early trading. Royal Caribbean down 24.5%. And Norwegian Cruise Lines down 31%. So the travel stocks are just getting pounded here. And the airlines are taking a hit as well in light of President Trump's restriction on flights from continental Europe to the U.S. for the next 30 days. You look at American, it's down 18%. You've got Delta down 15.5%, United down 16.5% in early trading. And no surprise that the online travel companies are hurting as well. Booking Holdings down 12%. That's Booking.com and Priceline and other services. And you're seeing comparable losses for Expedia and TripAdvisor. And then you look at the companies that supply planes and jet engines. They're taking hits too. Boeing's down 16%. The plane maker shares are tumbling for a second day. You know, we reported yesterday, people familiar with the matter are saying Boeing plans to draw down the balance of a $13.8 billion loan as early as tomorrow. And that sent Boeing down yesterday by more than 18%. You've got General Electric lower by 13.5%. Shares in the maker of jet engines and other industrial products are trading at the lowest price since the start of 2019. Now, any slowdown at GE will impede CEO Larry Culp's effort to reduce debt. And when we talk about travel, we got to think about the hotels. Hilton Worldwide's down 10%. Marriott International down 12.5%. Also, the ride-hailing services. There's concern that people are just going to stay home and they're not going to want to go out anywhere. So that becomes an issue for Uber Technologies. It's down 14%. Lyft down 15%. Both those stocks hurting for a second day. Now we turn to energy. Occidental Petroleum down 12.5%. The oil producers lower, even after activist investor Carl Icahn almost quadrupled his stake to about 10%. Now, Icahn's been critical of Occidental, slashed its dividend and capital spending budget this week. We saw similar moves out of Apache, and that stock's down 16.5%.
That's right where I wanted to go, and I know the two of you are up to speed on this more than I am. Mr. Icahn did what with his, I mean, let's review this. Anadarko Oxy. Oxy takes over. Oxy sort of like churns. The big guys like Mr. Icahn come in and the stock's tanked. Pick up the plot.
Well, you've got to remember one big piece of the plot. Warren Buffett's Berkshire Hathaway providing $10 billion in financing through preferred stock. They get an 8% dividend. Yes, indeed. They're getting paid $800 million a year. And after the dividend cut at Occidental, common shareholders are getting less than half as much.
So basically, Mr. Buffett gets paid and the common shareholders don't.
Not like they used to, considering the payout was cut by 86%.
And what did Mr. Icahn do in the last 24 hours? Do we know?
Well, I'm not so sure we know about the last one. He certainly talked to us and said, you know, he's got about a 10% stake now, and he's been critical of the company since last year when they made the Anadarko deal.
That's up from 2. So he's increased his position on the dip.
Pick up the plot quickly.
Well, I mean, let's just look at the banks. Bank of America down 11%, Citigroup down 9.5%, JP Morgan Chase and Wells Fargo down 8%. Then you look at the biggest technology companies, Apple down 7.5%, Microsoft down 6%, Advanced Micro Devices down 9%. I can tell you one stock that's up, though. It's Tegna, higher by 6%.
What is Tegna?
That's the old Gannett TV stations.
Are you kidding me?
Well, they're becoming a target of a bidding battle. Person familiar with the matter told us that comedian and television producer Byron Allen made an offer for Tegna, and that's on top of proposals from Gray Television and Apollo Global Management.
David, I don't care. It's such a relief from all this econo-babble that we've been doing. David, that was brilliant. It was like therapy to hear about individual company stocks. Let us review now. We're lining up Marcus Ashworth, I believe, in London, and we're going to get him on the bat phone here in a moment. Futures negative 139 and the VIX rather 62, but that's news, Paul, what, 2 hours ago, 3 hours ago? It's frozen.
No.
Let it go. It's frozen. It's a lockdown. and the answer, I'm not going to sing. No, but seriously, Paul, ETFs, the SPY ETF trades even on lockdown, and it is a vector. I can give you the line here. That's a vector here from 844 this morning, now down 7.1% on the equivalent ETF. Right now, Marcus Ashworth on how the markets will interpret Christine Lagarde here in 22 minutes. Marcus, clearly the markets take this, and they're not thrilled, I guess is the translation. The euro's pretty much unched as well, and equity futures in the U.S. roll over. What do you observe on your terminal in London?
We're seeing Italy massively wider. It's a real worry. We're seeing France wider, which is not in itself a worry, but certainly shows you that really only things like the Netherlands and Germany are tighter. This is therefore a flight to quality. This is not enough.
Right.
My first take is that we've hit the lower bound on rates in Europe. They're not prepared to cut rates for negative 50. In itself, that's probably very good news. And actual fact, if you look at the package, to an incredibly complicated bunch of numbers, they will allow people to borrow money at certain circumstances below that negative 50 rate. And that is actually quite important, but no one's seeing that. That's the noise. Okay. They're adding 120 billion of extra QE, but that's over 9 months. There's not even doubling the package. Right. It's not enough.
Marcus, you have provided global leadership with clarity of essays about the ramifications of this negative rate experiment. Do we have any idea how we extricate ourselves from this lower bound now that Christine Lagarde has had the courage to say enough? Is there any model we can use as we try to migrate out of a German 2-year yield of a negative 0.925%?
Well, 3 years, this is below negative 1%. But this is not Christine Lagarde, and that's what people are taking from this. This is Germany. Germany has said 9, and that is the read that the market's taking at the moment. And I think that's, look at the banks selling off yet again. This is deeply worrying. I think that people feeling that they're out of bullets.
And Paul Sweeney, Deutsche Bank, from a 10 success, Mr. Savings success of the last 90 days, 10 euros, now breaking down again from like 5.80 to 5.52 on Deutsche Bank.
Yeah, absolutely. The crisis bellwether there, if you will. So, Marcus, what are kind of next steps here? We had this ECB announcement here. Where do you think the markets go from here? Where do you think the next milepost markets are going to be looking for?
Well, I hate to say it, but I think that the markets are testing here the central bank's ability to react. Yep. And indeed, what happens from that is the complete lack of fiscal response. We've heard some warm words from Merkel, but really it's meaningless. Again, they're thinking of getting rid of the Schwarze Null, the black zero, but, show us the money, literally.
Yeah. Marcus, I've got a chart up, folks, and this is the glory of the Bloomberg terminal. There's all sorts of functions we have where we can bring up inside financial ratios. Marcus, it's just one chart, but the Deutsche Bank book value to 4 digits has just broken down to 19.56%. That's stunning. I mean, I folks, I can honestly say in my brief 15-year career, I've never seen that. I mean, Marcus, I'm so young, but how does Mr. Savings move forward if he's overwhelmed by market events.
Look, I wrote a piece last week saying that they should look at buying bank bonds. It was done more in jest than reality. I knew they wouldn't do it, and they haven't. But the reality is look at what the Swiss National Bank does, and then technically so does the Japanese central bank do. Yeah. They buy bank equities. But if they don't do this, simply the next step will be they'll have to nationalize the banking systems. That is this is extreme. But the point is that the more they dither, the more they delay. This is going to only get worse for Europe, and they are simply not helping themselves.
I put that word dither in the script the other day to Open TV, and I guess that's where we are. We will not dither along anymore, Marcus. You've got to get back to work with your wonderful, clear essays for Bloomberg Opinion. Marcus Ashworth on very short notice off London. Paul, what's your take here on it? To me, Madame Lagarde's got a really difficult chore in 13 minutes.
Really difficult chore, Tom. Exactly. I think, as Marcus suggested, the package coming out of the ECB was just not enough, but you have to admire her efforts to not play with the interest rates anymore, going to your topic, Tom, about these negative interest rates. So she's really between a rock and a hard place. But I think it's also the President Trump last night just not delivering for markets here. And I think that's kind of what we're seeing here with the limit down on the futures.
We got the futures limit down negative 140 to carry it over to the Standard & Poor's 500. We're down a solid 30 SPX points from there as well, down 6.7% right now. We have a special treat for you. Before we frame the moment of 9:30 in the market open in Christine Lagarde's press conference, none other than Gary Shilling will join us. That is a good and beautiful thing. Stay with us. This is a historic day for the markets. This is Bloomberg Surveillance.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL. Every journey matters.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Update by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. The rout in global stocks deepening after the U.S. and European policy responses to the worsening spread of the coronavirus rattled investors pining for more. Treasuries and haven currencies are rallying. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures are down 139 points. Dow futures down 1,231 and NASDAQ futures down 402. The DAX in Germany is down 7.25%. CAC in Paris down 7.9%. FTSE 100 down 7%. 10-year Treasury up 2 4/32, yield 0.65%. The yield on the 2-year is up 0.41%. NYMEX crude oil down 6.8% or $2.25 at $30.73 a barrel. COMEX gold down 2% or $32 at $16.10 an ounce. The euro 1.1216 against the dollar. The yen 104.05. That's a Bloomberg Business Flash. Tom and Paul.
Karen Moscow, thanks so much. That's a best in world class data check by Karen Moscow. As she mentioned, the lockdown futures, Paul Sweeney, negative 140. And we've done worser than that over the last 2 hours. And we're rolling over right now. We're not through the low seen just after the 9 o'clock hour. But here at 9:19 Wall Street time, we're testing down negative 7% on SPX futures. Paul, what else do you see on the screen?
Yeah, it's just interesting. Oil continues to fall off the cliff, Tom. We're testing that WTI, West Texas Intermediate crude, $30.70 a barrel, down 6.9%, Tom. No bid there for crude.
I really agree with you to follow West Texas Intermediate as one proxy of credit distress. What we're going to do here now is pause. We've got Madame Lagarde coming up in 11 minutes. Karen Moscow will single-handedly try to get the market open in 11 minutes. And we will pause. There is a small blue book of 2 shades of blue color put out right after Robert Frost took the Barton Road. And the gentleman from Amherst College, the physicist, wrote a book where he talked about good and bad deflation. And as I've written, let's chart paragraph. It's the Ed Hyman School of Economics. Say something and show it. And we're honored on this truly historic day that Dr. Schilling would join us. I just can't say it, folks. Buy the book Deflation, read it, and reread it every 3 years. Gary Schilling, are we in good or bad disinflation?
I think we're probably in bad disinflation.
What's the difference?
Well, the addition is do you have high productivity, which pushes down prices? You have excess supply, or do you have deficient demand? And I think we're more in the deficient demand stage right now, particularly with the virus.
I know DiCaprio has the rights to the book Deflation, but if you were to write a new version of it now, how do you fold technology into that productivity and a good disinflation versus the bad disinflation so many of our listeners are living?
I think in the long run, we are going to see productivity blossom. Things like robotics, artificial intelligence, and so on. When they get big enough to really drive productivity, but they're still in their infancy. They're not, they're growing 100% a year or more, but they're not big enough yet to really move the overall productivity needle. So I think in the meanwhile, particularly when we're looking at the virus and the effects right now, it's more the bad deflation.
The ETF SPX breaks down, Paul. We're now down 7.1%. We just touched new weakness there for the morning, below the lockdown of negative 140 on S&P futures. Deutsche Bank, just as a European proxy, from a 5.50 to a 5.43. Where's the euro right now? 112.34, sort of unched as well. Paul Sweeney with the great Gary Schilling.
So, Gary, what I think people are trying to get a sense of as they try to put into context what's happening over the past couple of weeks with this coronavirus is try to put this crisis in context with maybe 2008. How do you compare the two?
Well, 2008 was, of course, a big bubble. It was a subprime mortgage. It was really a collapse in the housing sector. Right now, what we're dealing with was an economies of the world which are slow and slowing. Now, of course, the stock bulls are going to claim that everything was just hunky-dory until the virus came along, but that's not true. It really isn't.
I don't care. I was on triple leveraged all cash. I read your newsletter. Continue.
Okay. All right, but you look at job openings, you look at wage increases and so on. They all were really slipping, and of course, China has been slipping. So the point is, when you take a slow slowing economy, and then you create this shock of the coronavirus. That's what tips it into recession, in my view.
And is this kind of, I guess we're past the discussion point of maybe a V-shaped recession, because obviously now it appears to be more pandemic, this concern globally. How do you think this is going to play out? Because we're already starting to see China get back to work, and so theirs was a 2 to 3 month type of situation. Do you expect that kind of timing here for the rest of the world?
Well, I mean, you do have a lag situation. I mean, first of all, China has a very different situation. They denied that it existed, and then, of course, then they locked down everything. You can do that with a top-down society. You can't do that in the West. So things are much more stretched out, and they want them stretched out because they haven't got enough hospital beds if they wanted the whole thing to peak immediately. But then to reestablish the supply chains, and we're in a changed world now. I think that the globalists, the Davos crowd, are on the way out. They have.
Why are you looking at me like
that? They have.
You see how he did that?
Yeah, they have been for years. But
do I look like the Davos
This is
crowd?
the last.
I wore this bow tie for you today because it was man of Western Massachusetts. It's
man of the
Don't push it, Tom. but the point is that this is a nail in the coffin of the globalists, the Davos crowd, and it's really a threat to globalization, because now you look at drugs. Where do we get generic drugs? We get them from China, and you say, wait a minute, this is not only self-sufficiency. This is defense protection. This is national security, and I think I think this is really going to change. And of course, that's where Trump has been all along. He blamed everything on immigration and imports, and it just reinforces that whole feeling. So I think we're in a very changed world, and it's going to take a long time for this to get reorganized.
5 minutes to Lagarde.
5 minutes to Lagarde. So are you forecasting a recession in 2020? And if so, how deep do you think it could be?
Oh yeah, I think we're probably, you never know where you are until you get all the data and the revisions in, but we probably are in a recession already, and I think it could be deep. Probably not as deep as the subprime mortgage collapse. Real GDP declined 4.2%. Then maybe it's more like a 3% decline, but it could be stretched out.
Do we clear markets? Christian Schulz was brilliant with Citigroup moments ago, from just the great European economist, by talking about socializing losses. You and I remember, Paul's too young to remember, continental Illinois, where we socialized losses over 3 cups of coffee? They went under, we got over it, we moved on. We don't do that anymore, do we?
Well, maybe not, but relative to Japan, we do it. Let's put it that way.
Okay, I'll take your point. Are you going to write a newsletter this week when you're done patting the bees, where you're going to talk about the Japanification of Europe and now the Japanification of Missouri?
Well, I think we're that is a good point, but I mean, the socialization of debt, of course, if you get Bernie Sanders in there, you don't worry about it. It's all socialized. But yeah, there's probably more of that. But I think what's probably going to happen here is we're going to get massive fiscal stimulus. You no longer have any impediment to deficits. That went out. That's called modern monetary theory. Theory always follows facts. You get the facts, then you get the theory. And the idea is you have big deficits, interest rates come down, so they don't matter. So that removes the impediment. So we're going to get, I think, big stimulus. But it takes 2 or 3 years for that to actually get spent.
One more question, and then we got to let you go because we got to get back to the markets before Karen Moscow gives us the full data check and all that, and then Christine Lagarde in an historic moment. What would you suggest is the best practice right now for Chairman Powell?
Fade back and punt. I don't think the Fed makes much difference. Lower interest rates.
Does Donald Trump know that?
Lower interest rates are not going to get supply chains reestablished. They're not going to get people getting out of their bomb shelters and going out and spending. I don't think it makes much difference.
I got about 14 more questions, but we don't have any more time. Gary Schilling, thank you so much. Really honored to have you here on this historic day. I'll get out on Twitter and LinkedIn, folks. I really can't say enough about a seminal book of what? When did that book come out? 42 years ago? Was it,
well,
Frost?
you were the publisher.
I was. Frost, I think, was still
getting the
teaching at Amherst, just from what I remember. Anyways, the book Deflation, I can't say enough about it, is a primer on good and bad deflation. And Paul, you heard Dr. Schilling parse there that strange word productivity. There's not much productivity this morning at Deutsche Bank, is there?
No, just for a bank and a banking system, I'm thinking about Europe generally and certainly China, just putting this to the test, another obstacle for the general recovery they're trying to engineer over there at Deutsche Bank.
I'm going to interpolate on SPX lockdown what the VIX would be. It closed out 61.59 on this lockdown, and I'm looking at the fading ETF of the Standard & Poor's 500. Paul, I'm going to go out to 66, maybe a 70 print on the VIX, which is just not good.
No, it's not, and we haven't seen that. It's anything above 50 really gets people thinking that this is really extreme in the market. So here we are above 60.
In the time that we've got, Paul, left here, explain to people the idea of you sell stuff you have to sell versus stuff you want to sell.
Yeah, I think what we're seeing in certain stocks. Yeah, so some people are obviously panic selling. Some people are selling for margin calls, Tom. We see that a lot in these market dislocations. Even the big and wealthy CEOs who have borrowed against their stock, they're forced to sell.
So you sell your dogs?
Yeah, so I think for the average investor, you sell your dogs. You think about tax. You think about tax planning a little bit to get some losses. Not that anybody has any gains at this point to offset, but clearly there's a lot of. But we've heard a lot of strategists, Tom, talk about really trying to be disciplined, and if you like a name, you got to like it down here even more.
We're going to get the path here, folks, is Karen Moscow is going to do a proper data check, and then Christine Lagarde from Frankfurt, if she's on time, and she's usually very, very punctual. Let me frame the European check now. The 2-year German yield was a negative 1.xxx. That's Gary Schilling talk. It's come up to a better yield, less negative 0.91%. So there's a little bit there as well. The euro right now, if my eyes won't fail me here, the euro 112.31 is remarkably unched versus the announcements by the ECB here moments ago. The benchmark US 0.67%. That's a Gary Schilling yield. Right now, Karen Moscow.
All right, Tom and Paul, thank you. The opening bell is brought to you by SEI. Asset managers can exceed new thresholds for data management, reporting, and responsiveness. Transform your business with SEI's global operating platform at SEIC.com/IMS. And stocks are lower at the open, with the S&P 500 down 6.6%, down 181 points at 2560. The Dow Jones Industrial Average down 7.4%, down 1,744 points at 21,820, and the Nasdaq's down 6.8% or 540 points at 7412. The 10-year Treasury is up 2, the yield 0.66%, the yield on the 2-year 0.41%, and the 30-year yield is at 1.22%. Tom and Paul.
Karen, thanks so much again. With that print there, SPX down. It's down a little bit, 183 points as well. The photographers are done rather, and with the backdrop of the European Central Bank. Christine Lagarde is a president, and this, of course, is very new for her and a huge, huge moment right now. In the backdrop here is the great Deutsche Bank, now 5.39 euros, down a solid 8% today. Here is Christine Lagarde.
Very pleased to welcome you to our press conference. We will now report on the outcome of today's meeting of the Governing Council, which was also attended by the Commission Executive Vice President Valdis Dombrovskis. Since our last Governing Council meeting in late January, the spread of the coronavirus, COVID-19, has been a major shock to the growth prospects of the global economy and the euro area economy, and it has heightened market volatility. Even if ultimately temporary by nature, it will have a significant impact on economic activity. In particular, it will slow down production as a result of disrupted supply chains and reduce domestic and foreign demand, especially through the adverse impact of the necessary containment measures. In addition, the heightened uncertainty negatively affects expenditure plan and their financing. Governments and all other policy institutions are called upon to take timely and targeted actions to address the public health challenge of containing the spread of the coronavirus and mitigate the economic impact. In particular, an ambitious and coordinated fiscal policy response is required to support businesses and workers at risk. The Governing Council strongly supports the commitment of Euro area governments and the European institutions to joint and coordinated policy action in response to the repercussions of the spread of the coronavirus. We also welcome the decisions taken by the ECB's Supervisory Board, which are detailed in a separate press release, which I'm sure you have seen and was published earlier today. In line with our mandate, the Governing Council is determined to support households and firms in the face of the current economic disruption and heightened uncertainty. Accordingly, we decided on a comprehensive package of monetary policy measures. Together with the substantial monetary policy stimulus already in place, these measures will support liquidity and funding conditions for households, businesses and banks, and will help to preserve the smooth provision of credit to the real economy. Let me start with the first. We decided to conduct temporarily additional longer-term refinancing operations, also known by you as LTROs, in order to provide immediate liquidity support to the euro area financial system. Although we do not see material signs of strains in money markets or liquidity shortages in the banking system, these operations will provide an effective backstop in case of need. They will be carried out through a fixed rate tender procedure with full allotment, with an interest rate that is equal to the average rate on the deposit facility, the DFR. The LTRO will provide liquidity at favorable terms to bridge the period until the TLTRO3 operation in June 2020. And I come to the second instrument. The Governing Council decided to apply considerably more favorable terms during the period from June 20th to June 21 to all TLTROs operations outstanding during that same time. These operations will support bank lending to those affected most by the spread of the coronavirus. In particular, small and medium-sized enterprises. Throughout that period,
Christine Lagarde, speaking in Frankfurt, will follow this closely. We have a second freeze on American equities, down 1,000. I'm going to round it up, folks, because the numbers are too much. Down 1,700 points, 21,856 on the Dow. And we did get a VIX print out 12 big figures to 65.66. Let me give you those levels here. 21,856 on the Dow. 2549 on the S&P 500 and the VIX 65.66. The bond market is actually pretty stable here on this equity sell-off Of course, bonds anticipating so much of it. And Paul Sweeney, as you mentioned earlier, oil really can't find a bid. It's gentle, but $30.61 West Texas Intermediate.
Yeah, exactly. Risk assets across the board, Tom, getting hit here once again. Circuit breakers triggered for the U.S. equity markets, each down 7%.
The backdrop here for Madame Lagarde is Deutsche Bank was a solid 10 weeks ago at the peak. The recovering of Mr. Savings Bank when we drifted away to 7, then 6, and we've had an incredibly ugly half hour for Deutsche Bank, 5.33. Let us go back in Frankfurt to Christine Lagarde with the euro. Right now, the euro at 112.38. Here is Christine Lagarde.
Parties continue to be able to make full use of our funding support. I come now to the third element of our package. We decided to add a temporary envelope of additional net asset purchases of 100 billion euros until the end of this year, ensuring a strong contribution from the private sector purchase program. That envelope, in combination with the existing asset purchase program, this will support favorable financing conditions for the real economy in times of heightened uncertainty. We continue to expect net asset purchases to run for as long as necessary to reinforce the accommodative impact of our policy rates and to end shortly before we start raising the key ECB interest rates. In addition, the Governing Council decided to keep the key ECB interest rates unchanged. We expect them to remain at their present or lower levels until we have seen the inflation outlook robustly converge to levels sufficiently close to, but below 2% within our projection horizon, and such convergence has been consistently reflected in underlying inflation dynamics. We also intend to continue reinvesting in full the principal payments from maturing securities purchased under the APP for an extended period of time past the date when we start raising the key ECB interest rates, and in any case for as long as necessary to maintain favorable liquidity conditions and an ample degree of accommodation. You will have further details on the precise terms of these new operations that I have just described. They will be published in a dedicated press release that will be available this afternoon at 3:30. In view of the current developments, the Governing Council will continue to monitor closely the implications of the spread of the coronavirus for the economy, for medium-term inflation, and for the transmission of its monetary policy. The Governing Council stands ready to adjust all of its instruments as appropriate to ensure that inflation moves towards its aim in a sustained manner in line with its commitment to symmetry. Let me now quickly explain our assessment in greater detail, starting with the economic analysis. The latest indicators suggest a considerable worsening of the near-term growth outlook. The disruption of supply chains is impeding production plans in the manufacturing sector, while necessary containment measures against the further spread of the coronavirus are adversely affecting economic activity. Before the coronavirus outbreak, euro area real GDP growth moderated to 0.1% quarter on quarter in the fourth quarter of 2019, following growth of 0.3% in the third quarter of 2019. This mainly reflected the ongoing weaknesses in the euro area manufacturing sector and slowing investment growth. Looking beyond the disruption stemming from the coronavirus, euro area growth is expected financing conditions, the euro area fiscal stance, and the expected resumption in global activity. Now, this assessment that I've just shared with you is only partly reflected in the March 2020 ECB staff macroeconomic projection for the euro area, as the data cutoff date predates.
You're listening to Christine Lagarde, an historic moment in her early years, in months, I should say, here at the European Central Bank. Paul and I need to describe for you now the market that she is dealing with worldwide. First of all, Paul, in the United States, we had a first lockdown early, then we open, and then, Paul, we have a second lockdown now.
Yeah, so in the cash market, we're down 7%. That triggered the first circuit breaker for 15 minutes. When the markets reopen, we'll see how we trade from there. The last time we had the circuit breaker, the market's traded up a little bit, so the circuit breaker arguably worked several days ago. The next level downtime where the second circuit breaker for the cash market would be if there's a decline in the SPX of 13%, so we'll keep that in mind.
That benchmark out there. I want to make clear, in the pre-market, we have a guide from the ETF trading. Now that we're open, that ETF is locked just like the index, so I really can't give you an indication. One idea we have, and this is critical for Christine Lagarde, is she will go to questions and answers here, talking fixed income, credit, full faith in credit, the true investment grade markets, the high yield markets, without much talk, Paul, on equities. Nobody asked Deutsche Bank about that, did they?
Stocks 600 down 10%, Tom, here today. So we're starting to see the European markets here just kind of roll off here. So the stocks is down 10.3% right here.
And this is the broader, is this a Dow equivalent or an S&P equivalent?
This is the S&P. It's a European 600, more akin to the S&P. More akin to the S&P. So much very, very broad there, Tom. And that just highlights once again what you've been calling to our attention, Deutsche Bank. That stock is down 13.2% right here.
I want to make this clear, and we're really trying to be responsible, but I can state unequivocally Deutsche Bank is in free fall since 9:29, which is 15 minutes ago. We have yet to find a bid at 5.19 euros. Again, this is the Deutsche. We use the Deutsche Bank trading in Europe as well.
And also, Tom, just one of your favorites, Bitcoin. Just want to call it out, down 26% today.
I'm shocked by that as well. I don't want to get into a theory on Ethereum or Bitcoin, but very clearly something trading with gold. Looking at gold right now, it has moved abruptly negative 48 on gold. That's 15.94 the ounce. Let us go back to Christine Lagarde finishing up her statement with some technicals, and there'll be that critical Q&A from a very informed media audience here in Frankfurt. Again, the S&P in lockdown at a level, Dow level, 21,856. This is Bloomberg Radio. Here's Christine Lagarde.
The coronavirus for inflation are surrounded by high uncertainty, given that downward pressures linked to weaker demand may be offset by upward pressures related to supply disruption. The recent sharp decline in oil prices poses significant downside risks to the short-term inflation outlook. Turning now to the monetary analysis. Broad money growth, M3, stood at 5.2% in January, having moderated somewhat from its recent peak. Money growth continues to reflect ongoing bank credit creation for the private sector and low opportunity cost of holding M3 relative to other financial instruments. The narrow monetary aggregate M1 continues to be the main contributor to broad money growth. Loans to the private sector continued to expand. The annual growth rate of loans to household picked up somewhat to 3.7% in January 2020 from 3.6% in December 2019. The annual growth rate of loans to non-financial corporations remained unchanged at 3.2% in January, confirming the moderation seen since autumn 2019 and likely reflecting the typically lagged reaction to the past weakening in the economy. Overall, our accommodative monetary policy stance, including the measures taken today that I have just described for you, will safeguard favorable bank lending conditions and will continue to support access to financing, including for those affected most by the ramifications of the coronavirus, and in particular for small and medium-sized enterprises. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirm that an ample degree of monetary accommodation is necessary for the robust convergence of inflation to levels that are below but close to 2% over the medium term. Regarding fiscal policies that I have already addressed very early on in this communication, an ambitious and coordinated fiscal stance is now needed in view of the weakened outlook and to safeguard against the further materialization of downside risks. We certainly welcome the measures already taken by several governments to ensure sufficient health sector resources and to provide support to affected companies and employees. In particular, measures such as providing credit guarantees are needed to complement and reinforce the monetary policy measures that I have announced today. We welcome the commitment of the euro area governments and the European institutions to act now, strongly and together in response to the repercussions of the further spread of the coronavirus. Before I take your questions, together with the Vice President, we would like, on behalf of the Governing Council, to express our profound gratitude to all those who are dedicating their time and their efforts in saving life and containing the spread of the coronavirus. With that,
and also let me just announce...
Oh dear,
Christine Lagarde.
I made a mistake.
Oh, Christine Lagarde made a mistake. Let's hold.
The APP's envelope that we're putting together as part of our increased special effort is 120 billion euros, not 100. That's 120 billion euros.
The attorney, Christine Lagarde, getting the math right as well, as she figures out a press conference here, very new in her tenure. What we need to tell you is U.S. markets on close, Paul, we're 1 or 2 minutes away from that, right?
Actually less than 1 minute here, so we're open at 9:50 Eastern time.
We'll give you market quotes on that. Deutsche Bank, we're watching in Europe, 5.17 as low as 5.03. And we begin now the Q&A. They're laying out the rules here to an attentive audience. It's not a packed room, it's a larger room this time.
But I'll start in the room with Mr. Skolimowski.
Here we go, a question.
Madame Lagarde, my first question would be about the rationale for not cutting interest rates today. Could you give us the reason why there was no rate cut today? Is it because there was not enough support for such a move within the Governing Council? Or maybe you all considered this is counterproductive? That's my first question. Another question is about the issue you mentioned as the last, which is this extra envelope of QE. Have you also discussed, as part of adding that envelope, change to your issue and issuer limits of the current program? And also, will the decisions change anything with regards to the orientation of the APP towards meeting the capital key? Thank you.
Well, thank you for your questions. I would first of all like to indicate to you that we very much operated in the same setting at the Governing Council of the ECB. In other words, some members were in the room, other members were online and participated fully to the discussions. We innovated. We had.
And there we go, the market opening. Here's what we're going to do. We're going to do an audible here, surveillance audible. Christine Lagarde is always worth listening to. But these markets, this moment for all of you across America is extraordinary. I'll continue to fold in Deutsche Bank as a litmus paper for the European banking system. Paul, you and I will watch the VIX clock in here to review. The VIX over 30 is a big deal, 40, 50. Lehman worse on the VIX, I'm going to call 81-ish, maybe 82-ish. Right now, 65.66. And we get a market ebbing away here on the reopen, another 200 points down, Paul Sweeney.
Yeah, Tom, we were closed at we had a market trigger initially at 7% decline in the SPX. We're down 7.5% here now as it reopened just about a minute and a half ago. So more pressure on the equity indices here.
Yeah, Christine Lagarde's saying decision was unanimous to leave rates unchanged. And of course, that's a critical issue here, a real change in the rate methodology versus other vehicles as well. The VIX, I'm waiting to get a first print on that. We're going to be down 2,000 points here in a moment, 21,581. So we're now really getting up on 8,000 points from the high seen 3 cups of coffee ago. The ECB president says ECB tools are most efficient, best targeted for crisis, and we'll keep you abreast of those headlines as well. Watching this moment with a VIX 67.76, up 14 big figures, is Marcus Ashworth. We had him on earlier in the hour, and we're honored that he could come back to us as well. Marcus, what I see is a parsing of bankers helping the credit markets in a credit liquidity, even a solvency crisis. And am I right ignoring the equity markets? Is that how it works?
Well, funny you should say that, Tom. I'm listening to Christine Lagarde. I'm actually slightly wondering why I'm bothering. I'm quite close to a window, but thankfully it's solid glass, so I can't jump out.
Well, we did that. Without the surveillance, you have to thank Paul Sweeney and John Farrell for that. Be sure there's no open window with Ashworth around.
Yeah, the stock market is just absolutely collapsing. As we listened to Christine Lagarde tell us that she's going to use all the flexibility. She's going to do this X and Y and Z, but literally no one cares. You mentioned Deutsche Bank earlier. I'm just going to mention that they didn't call a perpetual bond yesterday. That bond is now trading at below 70 cents in the dollar, and that is an extraordinary thing if you think about. It is a perpetual bond, and not read too much into it. It was at 94 before they announced that decision. It's now down 25 points since then. So just to put it into context of what's happening out there at the moment, we're worrying about liquidity in the Treasury market, like seriously worrying about whether or not the U.S. Treasury, the most liquid market in the world, is actually fit for purpose. And we've got a clear decision from the European Central Bank that rates can fall more.
Marcus, I've got to interrupt because this dovetails beautifully with 2 brilliant people, Marcus Ashworth and a guy named Gartman down in Virginia. Dennis Gartman brings up the S word, which is the distance from liquidity to solvency. Just make that distinction, Marcus Ashworth. How do you define liquidity where we are now versus worries of solvency?
Well, it's return of rather than return on capital, and I think that's exactly what we're looking at in certain entities now. It's certainly very excellent companies in certain ways are now trading literally as if they are in distress, and mildly troubled companies are trading in proper distress, and that's something which is going to take an awful long time to sort out. Look, not to put too fine a point here, Tom, the simple point here is the world is looking now to the United States. You guys have got to do something big and soon. I think market is expecting a Fed rate cut, possibly even today, another big one, and we really, really need something out of the White House and Congress.
Marcus, thank you so much again. Just very kind of you to stay with us as we all monitor Christine Lagarde. Paul, what do you see over there?
Marcus's comments about, I think the market is clearly looking towards the White House, and last night did not deliver. That's what it appears the markets are telling us here today.
You wonder what the Fed will do in terms of, Paul, the niceties of letting Lagarde explain her moment. I mean, I wonder how coordinated everybody is. Down 2,020 on the Dow, 21,534. Really watching the VIX. We don't have a 70 print yet, 68.94 on the VIX. Here's what I want you to do, and I mean all this, particularly for those of you working at home on all of our digital product. Stay with us through the day. We've really made an effort with our team to line up the quality of guests you deserve in this moment of crisis. We are produced by, someone fully levered, long, Richard Truman. This is Bloomberg. Stay with us. Dow, negative 1986.
Me and Dell were singing.
Life. It's a funny old game, isn't it? 1 minute you're on top, the next, you need all the help you can get.
Yeah, later, yeah.
So make sure you're there for those around you. Don't just be a spectator. Be a supporter. Bleed for life. Join us at blood.co.uk.
Between game-winning shots and walk-off home runs.
Pitch. Swinging a line drive, slice down the right field line toward the corner. Looking up, and this one is gone!
Follow TuneIn on social media to stay in the game. From live reminders of the biggest games in every league to staff pick recommendations of our favorite sports shows and podcasts.
You're really greedy, Dak, but nobody's thinking that
Skip,
yet.
you know how these contracts work. All that 40 years for 5 years for $200 million.
Follow at TuneIn on Facebook, Twitter, and Instagram to hear more sports.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
This week on the New Yorker Radio Hour, we'll ask whether America is ready to elect a Democratic Socialist for president. Plus, the science fiction legend William Gibson on climate change and the end of the future.
How often do you hear the phrase, the 22nd century? Don't hear it. We no longer have that sense of cultural anticipation.
Listen to this episode of the New Yorker Radio Hour on TuneIn today.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Solutions explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
This is a Bloomberg Money Minute. The rout in global stocks keeps getting worse after the U.S. policy response to the worsening coronavirus left investors rattled and wanting more. We've got trading curves that kicked in the early minutes of trading this morning, with the Dow, the S&P, and the NASDAQ all down more than 7%. President Donald Trump's travel ban on visitors from Europe and what investors saw as tepid fiscal measures sparked the latest leg down in stocks, falling farther into bear market territory. Starbucks has outlined measures it may take to help prevent the spread of the coronavirus, from cutting down on seating to closing some locations. In a letter posted on the company's website, CEO Kevin Johnson said the company has learned from its experience in China, where the coffee chain at one point closed more than 2,000 locations. And crude oil continues to slide, now down almost 9%, right around $30 a barrel. Gina Cervetti, Bloomberg Radio.
When you put together the puzzle that's today's business and political environment,
can you make a call given this swirl of data?
Is that already being reflected in the way that they're priced?
Make sure you have all the pieces.
Which segments of Alphabet's business are most likely to come under scrutiny?
They're getting mixed signals from governments.
He's failed to gain traction. Will he have to abide by a subpoena?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Are we on the brink of a more serious downturn?
I've always thought of the municipal bond market as a little bit of a safe haven.
Banks are going to have to start paying their depositors more.
Are we still in that mode where we're buying the dips?
Breaking market news and insight from Bloomberg experts.
Cash, if you're looking at treasury bills, provides a higher return than stocks and bonds here in the U.S.
If your consumer is a woman, you're more likely to be a growth company.
Longer-term interest rates can go down, even with short-term interest rates still going up a little bit.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
This is a historic day in markets. We have the Stoxx 600 over in Europe having its biggest fall on record, dropping 10% or more. We're seeing a lot of volatility with one of the market-wide triggers being triggered in the United States, although now we are trading in off the earlier lows. We will dig into all of the market action, what's driving it, and what's ahead coming up. Let's get the numbers. Greg Jarrett has that for us with a Bloomberg Business Flash.
Lisa, as you alluded, markets halted trading shortly after the open as all three indices went down over 7%. They reopened, then continued to plunge. We've got a little bit of a comeback, but way still in the red. President Donald Trump's travel ban and tepid fiscal measures sparked the latest leg down in risk assets, while the European Central Bank failed to stem the rout after it left rates unchanged. Lori Calvasina at RBC Capital tells Bloomberg that it's where the S&P actually closes today that is key as far as recession is concerned.
We've said that if we don't hold around the 2,700 mark, and we'll see what ends up happening today, then we think it's going to be because markets are starting to anticipate a recession or at least price one in. And in that kind of move, you'd expect to see the S&P go down into the 2,300, 2,600 range. Over time, really since the 30s, the median and average drop in a recession have been 24% and 32% peak to trough. And so that kind of move today would take you into that 2,300, 2,600 range.
And right now, the S&P is down 25.52. We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. That computes to down nearly 7%, down 190 for the S&P. The Dow is down 8%, down 1,904. The NASDAQ is down 6.7%, down 531. The 10-year is up over 2% now. The 10-year yield is at 0.6626. West Texas Intermediate plunges down 6% at 31.01 a barrel. COMEX Gold is down 3.1% at 15.9290 an ounce. The dollar yen 104.72. The euro $1.1219. The British pound $1.2607. That's a Bloomberg Business Flash. Bloomberg Markets is on now with Lisa and Paul.
Greg Jarrett, thank you so much for that. We appreciate it. As Greg was just reporting, red on the screen across the board, risk off. Equity indices off about 7% across the board. Looking at Bitcoin off 24%. So just highlighting the volatility in the marketplace. Bloomberg Stocks editor Dave Wilson. Boy, on this historic day, where do you start here?
Here's where we're going to start. By taking a look at S&P 500 stocks that are down more than 10%. I'm looking at my Bloomberg terminal right now, and you have about 115 of them. I mean, so that tells you the magnitude.
Yep.
That's one number that matters.
Okay.
Here's another one, and it's a bit arcane in a sense because if you think about how the S&P 500 is calculated, it is based on share prices on companies' primary markets. So in other words, if you're listed on the New York Stock Exchange, it's based on an NYSE price. When the circuit breaker kicked in 5 minutes after the open, 121 stocks in the S&P 500 had not even started trading yet on the NYSE.
So what does that mean?
That means that people were flooding the market with sell orders so much that the designated market makers, the people on the floor of the exchange who figure out where prices need to be, couldn't come up with a price that would balance out the buyers and the sellers.
All right, so let's dig into some of these more than 100 stocks that are down more than 10% or that have been at some point since trading opened about a half an hour ago here in New York. I'm just trying to understand if there's any kind of rationale behind who they are, or is it just blanket selling? If you got it, sell it.
Well, there's a rationale, and it's the same rationale that has really driven the losses over the past month. Because you look at the biggest declines in the index right now, you see the cruise lines, Norwegian and Royal Caribbean. Carnival not far behind, even though they actually just sort of shut down their Princess line for the next 60 days in response to the coronavirus. So you've got that piece of it going on. You've got the energy companies, to some extent, as well, taking hits here. Marathon Petroleum, notably, down 19%. And then beyond that, I mean, you look for companies that, tie in one way or another to travel, leisure time. Live Nation jumps out. You're talking about a concert promoter.
Yep.
Down 18%. So there's a logic to it. And it's really the same kind of logic that kind of has driven things down to the point where the Dow and the S&P 500 and NASDAQ composite have all crossed that 20% threshold in their declines that would signal a bear market.
Well, Dave, you're mentioning the cruise lines. Fortunately, we have Brian Egger. He covers all things on the cruise lines, the gaming, the lodging, all that leisure stuff that you were just talking about, Dave, for Bloomberg Intelligence. He joins us on the phone. So, Brian, talk to us just about this Carnival cruise thing. You know, the Princess Cruises, they're canceling all voyages for 2 months. This seems unprecedented to me. Give us a sense of how big this is.
Yeah, it is a very big move, Paul. To put it into perspective, Princess Cruises is about 20% of Carnival's fleet in terms of capacity. So if you basically shutter those operations for 60 days, it probably removes right there 3.5% of annual capacity and probably 4% plus of gross profit and net income. So it's a big move. And remember, it's the Princess brand that was most directly affected by the adverse news headlines about individuals unable to disembark at ports both in San Francisco and Yokohama, Japan.
So, Brian, do you think we'll see a broader shutting down of the cruise industry? I'm surprised there's just one line here. I mean, cruising is cruising is cruising, and these are just different brands, different price points. Do you think this is going to be more widespread within the industry?
I think it's logical to draw concentric circles around the Princess brand since that brand was so closely associated with the incidents to date. But yes, I would think what the market seems to be discounting is the prospect that other brands and operators could be affected, and things like effectively laying up ships for 60 days is just part of a series of actions. They might include accelerating dry docks, using some short-term borrowing, cutting marketing and general administrative expenses, trying to defer some new build installment payments. So this is one of a series of actions, perhaps among the most dramatic, that the cruise lines are going to have to take in this unprecedented period.
Brian Egger, thank you so much for being with us. Brian Egger, senior gaming and lodging analyst for Bloomberg Intelligence. I just want to bring you up to speed on what's going on in the market, because it really is changing second to second. The S&P now down 7.4%, NASDAQ down 6.9%, the Dow down 8.5%, shifting around, whipping around, very deeply negative, triggering a circuit breaker already for this is the second day of this week. And I wonder, Dave, do we have any sense of the historical precedent where you get 2 days in 1 week where circuit breakers are being triggered?
You'd have to go back. I don't even know how far, to be honest. I can't think of an obvious example. There may well be one, and it just doesn't occur to me at the moment. But, you haven't seen anything this messy, you might say, in markets since 2008, 2009.
So talking about messy, that's exactly where I wanted to go, the question of orderly or disorderly, and what you talked about earlier about all of those stocks that hadn't traded when the circuit breakers were triggered earlier this morning. I'm trying to understand about the functioning of the market. I'm looking right now at the price of gold plunging, presumably on margin calls. People sell what you can, not what you want to. How is the functioning of the market right now?
Well, you do have to ask the question, given the way that things started out today. And by the way, there's still one stock in the S&P 500, Leggett & Platt, that has yet to trade after the halt on the NYSE. It didn't trade before the halt either. So, when you see that sort of thing pop up, it's clear that there is a struggle going on to kind of keep the market orderly. If you were to compare this, to going back to 1987, what we've seen in terms of trading is nothing like what we saw back then. But at the same time, you're talking about a market that took a huge hit in one day, like 22, 23%. And this has happened over the course of a month. So it's been more gradual. You'd expect the trading to be more orderly, but today it's really kind of getting off the rails a bit.
Off the rails. That absolutely characterizes it, I think. Bloomberg Stocks editor Dave Wilson, thanks so much. Again, off the rails here. S&P off 7.6%. Right now, let's head down to our 99.1 studios in Washington, D.C. to Amy Morris. Let's get some world and national headlines. Amy, what do you have?
Well, thank you, Paul. Stocks plunged at the open, falling more than 7%, triggering a trading halt. You've been talking about that this morning. President Trump's remarks on the coronavirus were the catalyst for the latest leg down in risk assets. A combination of travel restrictions between the U.S. and Europe and underwhelming stimulus did not do a whole lot to reassure investors. Former Homeland Security Advisor Tom Bossert telling ABC News these new restrictions introduced by the White House may be too little too late because the virus is, after all, already in the U.S.
And additional screening measures are going to have little to no effect at this stage on controlling the spread of the virus.
Shares of companies in the travel sector continuing to struggle amid the virus outbreak. Demand is weaker. Airline stocks like Delta, JetBlue, and American Airlines fell as much as 15% in pre-market trading. European Central Bank plans to let banks run lower capital ratios to deal with the fallout from the coronavirus. European policymakers are rushing to provide stimulus to make sure banks continue to provide credit as the spread of the novel coronavirus wreaks havoc on that economy and threatens to push up bad loans. And then there's sports, right? The National Hockey League leaning toward following the NBA's lead, suspending its season in response to the coronavirus. That, according to a person familiar with the situation. Bloomberg News has learned that the NHL, the Hockey League, expected to propose stopping all games today. The NCAA also saying it will hold its March Madness tournament games in empty arenas. No fans will be allowed. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
Two people who are as fascinated by the markets as you are.
What's your sense of the competitive landscape in the cloud business?
Lisa Abramowitz.
People were talking about potential regulatory pressure.
And Paul Sweeney.
Are you seeing flows into ESG ETFs?
Bloomberg Markets.
What's your main conversation today with some of these corporate executives?
Weekday mornings at 10 Eastern.
They're spending a lot of money there.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Right now, Doctors Without Borders medical teams are operating in some of the most remote and dangerous corners of the world. When front yards become front lines, at the crossroads of conflict and epidemic, where there are no hospitals, that's where we operate. Your response is critical to our response in places where few others will go. That's where we operate. Learn more at doctorswithoutborders.org.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies. Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
Tom has been a teacher for over 40 years. One day, I think one of the students had asked the question and he didn't remember the answer. And I also noticed that he was letting his class out earlier than they were supposed to let out. I was really starting to worry.
Levi and I talked about how it would change our lives, but he was there beside me.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/our stories to learn more. A message from the Alzheimer's Association and the Ad Council.
They call me the drum guy, being around London, one gig to another. I carry my tom-toms, bass and stalls, snares and cymbals, hi-hat. Won't mind a helping hand while I board a taxi. That's why I choose Ola. With driver's quality assessed by DriveTech, ride the change with Ola. Download and sign up now. Enjoy no surge pricing until the 12th of April.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
For up to 50% off a choice of floors and beds. For an extra 20% off selected ranges. For something for everyone. Carpet Right. For life. Offer ends Tuesday.
Matt Letizia, what did you make of that performance today?
Well, it really was a game of two halves, to be honest, Jeff. Leicester came out in the first half really...
Letiz?
What's up, Jeff?
Run for it!
What the...
Move over, football. Cheltenham coming through. And Sky Bet are on the charge. With a roaring first race special every day of the festival. Sky Bet. That's betting better. Applies to first bet on the first race at Cheltenham on the main race market only. Place terms apply. Eligibility restrictions. Offers vary each day. Check site for details. T's and C's apply. 18 plus. BeGambleAware.org.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, try not to mumble.
Playing, let's get ready to rumble.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
Yeah, so I want to upgrade to like the latest phone you got. Okay. All right. But like for an unbelievably good price. Yeah, and I want it where I could choose the length for my own contract. Yeah!
On O2, you're our headline act, which is why you can get the phone you want for less per month with a custom plan on O2.
Minimum upfront cost. Direct only. Device plan of 3 to 36 months. Refresh credit by Telefonica UK Limited. Terms apply.
Lines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
The rout in global stocks continues to deepen. Investors are showing a lack of faith in the U.S. and European policy responses to the worsening spread of coronavirus. Treasuries and the dollar surge. We look at those numbers every 15 minutes throughout the trading day on Bloomberg Radio. The S&P 500 is now down 7%, down 192. The Dow is down almost 8%, down 1,869. And the NASDAQ is down 6.5%, down 521. The 10-year is up 1 and 28 seconds. The yield is 0.6798%. West Texas Intermediate crude oil is down 6% at $31 even per barrel. COMEX gold is down 3.8% at $15.80.10 per ounce. The dollar yen is at 105.23. The euro $1.1159, and the British pound $1.2604. Carnival fell as much as 24% in London after its Princess Cruises unit said it will pause global operations for 2 months because of the impact of the coronavirus. That is a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
As Greg Jarrett was just reporting, equity markets continue to sell off in a big way, off 7% across the board. We did have that circuit breaker triggered earlier this morning. We are now trading again. One area I want to spend a few minutes on, Lisa and I, we really like to focus on crude oil, and it continues a free fall here. West Texas Intermediate crude down 6% today to about $31 a barrel, really on that $30 a barrel kind of a support level right there. Obviously, a big issues in global supply demand concerns. So let's dig into that for a few minutes here. Wells Fitzpatrick, he's a managing director for E&P research at SunTrust Robinson Humphrey. He joins us on the phone from Houston, Texas. So, Wells, I mean, clearly there's a demand issue out there. We've seen that brewing in the coronavirus, really putting a point on it. But in the last week, we've also gotten a supply shock here, and we've had a week or so here to kind of digest what's going on between Saudi Arabia and Russia. I want to get your informed opinion about what do you think Saudis and the Russians are actually thinking here?
Yeah, it's clearly a game of brinksmanship, and Saudi is putting all the cards on the table to make it a credible move for them to go up north of 12 million barrels a day. Obviously, they've contracted a fleet of tankers. They've lowered their selling prices, so they are trying to gut check Russia. It's a game of chicken at this point. I mean, the fact is that Saudi and the Gulf increasing production by well over 2 million barrels means that they're selling out of storage. So is it a long-term strategy? I don't know. I mean, swapping your storage for Chinese storage at less than $30 a barrel doesn't seem like it. But clearly at this point, it's a game of chicken, and specifically a game of chicken between two men, MBS and Putin.
Right now, I'm looking at the shale patch, in particular, high-yield debt of the energy companies in the United States. I'm trying to understand how deep the pain is going to go. I'm looking right now at the market value of high-yield junk of energy junk bonds. It's fallen by $50 billion since the beginning of this year.
Yeah, it's been brutal. It's been brutal, and the market caps are something similar. All the traditional avenues for financing for the industry have essentially been shut off. I mean, A&D was down over 40% in 4Q before we really hit the skids. High yield, as you said, yield the worst is more than double. The bank revolvers are going to be down in the upcoming revolver redetermination season, and no one's talking about issuing equities. So if you have near-term debt maturities, it's really something that you have to pay out of cash flow or out of some sort of fire sale. So the companies that we're most cautious on are the ones with near-term debt maturities and the ones that are largely drawn on their bank lines, because obviously those bank lines are going to come down. So if you have 70% out, it's reasonable to expect that you would be 100% or even overdrawn at the end of this spring redetermination season.
Just to give a sense of the scope of the pain, what proportion of the shale producers, whether in the Permian Basin or elsewhere in the United States, what percentage do you think will run into solvency issues and have to either restructure or declare bankruptcy?
Yeah, that's a great question. I think that there's a very reasonable case if this continues for a couple more quarters that we challenge the, I don't want to even call it a record, but the previous record of 34 E&P bankruptcies in a quarter, and that was second quarter of 2016. Could it get that brutal again? Yeah, if they go through with this price war and oil stays in the low 30s or even dips into the 20s, it gets pretty bad pretty quick for a lot of these folks. Another perhaps underappreciated aspect is a lot of these companies had three-way hedges. So, you sell another put to get a little bit more upside, and it's so far out of the money that 2 months ago we didn't really think about them. But, now you have to build all those into your model, and 25% of these companies have them, and it limits the downside protection. It essentially limits your insurance. So there's a lot of moving parts, and frankly, not a lot of them are good, except for maybe the gas side.
So, Wells, when are we going to see some of the majors come in here and just scoop up and buy some quality assets at really discounted prices?
That's a great question. I mean, I think that they are in full defense of their distributions. It's going to be hard for the big guys, even Exxon, to defend their dividends with $30 WTI. Maybe they can do stock deals for some of these companies, come in and rescue them. But to your earlier point, if a company's debt is trading at 30 cents on the dollar, do you really want to go in and buy them out and make those bondholders whole when that value might not be there? So when bonds get this low, I think it actually freezes up the A&D market a little bit more than the valuation should, in theory, help.
Wells, thank you so much for being with us. Wells Fitzpatrick, Managing Director of E&P Research at SunTrust Robinson Humphrey, joining us to talk about the wild ride that we're seeing in oil prices now, the lowest since 2016, when that market was at the core of a whole lot of pain. Right now, I'm looking at just crude traded on the NYMEX, $31.12 a barrel. I'm looking right now at the broader markets. Just a brutal day. We are off the lows, but still the S&P down 6.8% to the level people are watching, 25.42. We're going to see if we can get below that 25 level. Some people saying that's a threshold to keep an eye on. The NASDAQ now down 6.3%. The Dow down 7.6%. More ahead on markets. This is Bloomberg.
This is a Bloomberg Money Minute. Stock investors racing to the exit, equities plunging as trading resumed after the 15-minute New York Stock Exchange mandated halt when the S&P fell 7%. The Dow down 2,000 points this session. President Trump's remarks on the coronavirus are a catalyst for the latest leg down, especially the travel restrictions between the U.S. and Europe. The dash for cash is on. Some of the nation's biggest companies are maxing out credit lines, grabbing cash before it can disappear. Boeing, Wynn Resorts, and Hilton, some of the names taking quick steps to improve their cash positions. Starbucks expanding its paid leave policy for employees who get sick, joining other big companies, including McDonald's and Walmart. And the NCAA will hold March Madness without spectators. Hosting games without fans will allow the NCAA to keep players on the court and continue its all-important nationwide broadcasts. More than 80% of the NCAA's $1.1 billion in annual revenue comes from this event. Courtney Donahoe, Bloomberg Radio.
The average time a resume spends on an HR manager's desk is 7 seconds, and most of them are tossed aside. Now imagine if one of those resumes belonged to Yasmin, who was
living in a shelter, juggling 3 jobs. I had to be resilient. That's something that you can't teach.
We rely so much on a resume, yet it could never tell the full story of someone who
had to be independent and take initiative. And that's how I handle every project I get.
Discover new ways to develop great talent at gradsoflife.org. Brought to you by Grads of Life and the Ad Council.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
Life. It's a funny old game, isn't it? 1 minute you're on top, the next, you need all the help you can get. So make sure you're there for those around you. Don't just be a spectator. Be a supporter. Bleed for life. Join us at blood.co.uk.
Yeah, so I want to upgrade to like the latest phone you got. Okay. All right. But like for an unbelievably good price. Yeah. And I want it where I could choose the length for my own contract. Yeah.
On O2, you're our headline act, which is why you can get the phone you want for less per month with a custom plan on O2.
Minimum upfront cost. Direct only. Device plan of 3 to 36 months. Refresh credit by Telefonica UK Limited. Terms apply.
Petrol or electric? Why choose petrol and electric? Discover the BMW plug-in hybrid and electric range. 14th to the 21st of March. Visit your BMW retailer. Sometimes electric, always BMW. Participating retailers only.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
The government has coordinated and streamlined its coronavirus messaging, but is it the right message?
What's really necessary is for the people in the government who don't know the details to stop telling us things like there will be a vaccine in 1 year. Stop it. That's not helpful.
Making sense of the noise and the silence on this week's On the Media from WNYC. Listen to the On the Media podcast from WNYC Studios on TuneIn today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and tune in on Facebook, Twitter, and Instagram to get the most out of TuneIn.
With complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/C's change.
Sweet strawberry icing. You're in Goodwill, and just past that vintage denim jacket you spot miniature donut earrings. You lean in. That's the scent of shopping success. Because at Goodwill, every item you buy funds local job training and more. So bring home those donut earrings and bring home so much good to your community. Goodwill. Bring good home. Brought to you by Goodwill and the Ad Council.
Interconnect here.
Let's start with the national security implications of this.
Balance of Power with David Weston.
What could the United States do to help?
Weekdays at noon Eastern on Bloomberg Radio. Bloomberg, the world is listening. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up, remember all that talk about a V-shaped recovery in the economy? We'll see if that's still in the cards given the volatility that we've seen in financial markets this week. Plus, we'll chat with our good friend Barry Ritholtz to see how he's navigating these markets. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
Thanks, Paul. We've been going down so far so fast, my feet are getting hot. The rout in global stocks is deeper as investors show a lack of faith in the U.S. and European policy responses to the worsening spread of coronavirus. But Jonathan Golub of Credit Suisse tells Bloomberg he firmly believes markets will go back up in a big way. But he says, first, they may go down further.
The number of cases will go up while the testing increases, but then it'll start to come back down. And when it does, the market's going to rebound quite strongly. And even the economic impact will probably be limited to the next several months.
We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. S&P 500 is down 6.3%, down 174. The Dow's down 7.4%, down 1,746. And the NASDAQ is down 6.2%, down 492. The 10-year is currently up 1 and 23/30 seconds with a yield of 0.6955%. West Texas Intermediate crude right now is down 5.3% at $31.23 a barrel, while COMEX gold is down 3 3/4% at $15.80.90 per ounce. The dollar yen is at 104.97, the euro $1.1163, and the British pound $1.2623. This headline from the EIA, they're reporting U.S. natural gas stockpiles fell 48 billion cubic feet last week. That's a Bloomberg Business Flash. I'm Greg Jarrett.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
As people look to fiscal and monetary policy members for some guidance on how they plan to support the markets, keep companies operating despite the fact that business may decline in the wake of the coronavirus-induced slowdown, there is a question about the functioning of markets, and that's where I want to go with John Authers, who's been watching markets for decades and really has a deep understanding of this aspect of the world. John, senior markets editor for Bloomberg, calling us in from his, what is it called again? Like social distancing. We're all social distancing ourselves from socialness. John, I want to get your sense on whether the trade that we have seen so far in stocks and bonds has been orderly or if it's veering into something much more disorderly, and how we can understand that.
Right. Well, the first 2 or 3 weeks of this sell-off, I
do think were primarily orderly. It was a very unusual, very clear, very strong exogenous shock and a reasonably orderly attempt to deal with that exogenous shock, the coronavirus. What we've seen in the last week, it's really about two shocks. The oil price is, for the markets, at least as big a deal as coronavirus. And we are now plainly today seeing the first very clear signs that this is now disorderly. This is definitely reminding me of 2008 at this point. I don't want to, you've always got to be careful about being alarmist at times like this, but honesty requires it. This is plainly the most disorderly markets have been since the height of the crisis.
So, John, there's an article in the Terminal today, kind of linking what we're seeing today's action with the speech last night from President Trump, arguing arguably a lack of leadership in terms of providing a fiscal stimulus package that the market deems sufficient. How do you view that?
I think there's far more to this than negative reaction to Donald Trump, but plainly that's a large part of it. People wanted a clearer and more direct response, and they wanted very good guidance when it comes to the markets on what the fiscal response would be, and we didn't get enough clarity about that. And plainly, this is the states who have separation of powers. There's going to be a lot of politics before we get there. Again, this is begins to be reminiscent of 2008 and all the difficulties over agreeing a TARP plan to bail out the banks, which basically ended with the markets tanking, diving. It's not just Donald Trump this morning, it's also the European Central Bank, who came up with as good a targeted series of measures as I think they could have done in the circumstances, and it plainly hasn't been enough. European stocks down the worst ever. European or Eurozone bank shares are the lowest since the beginning of the Eurozone, lower even than during the worst of the crisis when Mario Draghi had to say whatever it takes. So that's again a sign that it isn't just about confidence in Donald Trump, although that doesn't help. It's also that those shocks are now turning into the lack of confidence in other financial players that we saw in 2008 and can breed on itself. That's the very disturbing new development in the last 24 hours.
It's important, though, to draw distinctions, what is and what is not like 2008. Yeah. From all reports, we are not hearing that the banks are in any kind of risk of becoming insolvent or anything like that. They have sufficient capital. This doesn't appear to be a leverage issue at the largest financial institutions. So that's not what's causing the disorderly trading. Where are you looking in particular when you talk about markets spinning out of control?
Well, if you take a look at some of the emerging markets, the Brazilian stock market is now halved for the year, which is quite drastic. So obviously some of those markets that are treated almost as residuals of other trades have fallen very dramatically. We've seen disorderly trading in currencies itself. And then your area that you know more about than I do, but fixed income, plainly, we are now seeing significant anxiety afflict the credit market, the corporate credit market, and we're seeing attempts, cash calls, attempts to bolster balance sheets with calls on cash. Again, this isn't. We have a problem because all of us naturally benchmark to 2008. This is not as bad as 2008. But has it now become something, the same kind of a thing as 2008? A week ago, I would have said definitely not. Now I would say yes, we are in a situation where if we want to get that V-shaped recovery, which the sell-side analysts are still calling for, something needs to be done to avert a credit crunch, a credit crisis in the next few weeks and months.
John Authors, thanks so much for joining us. We really appreciate your commentary and your wisdom over 30 years covering markets. We appreciate that. John Arthur, Senior Editor for Bloomberg Markets, joining us via phone. And we appreciate his commentary and all the commentary from Bloomberg Opinion. You can find out at Bloomberg.com/opinion. And if you're on the terminal, you can get Bloomberg Opinion's work on OPIN Go. Markets right here down 175 points on the S&P. That's 6.4% off the lows, but still a very, very heavy tape. Right now, let's head down to our 99.1 studios in Washington, D.C. to Amy Morris for world and national headlines. Amy.
All right, thank you, Paul. House Democrats have a new bill pending to help in the coronavirus response. It would provide billions for paid sick leave, nutrition aid, expanded unemployment insurance, and other measures. Republicans say they didn't even know about this bill until about 15 minutes before the House Rules Committee meeting late last night. Now, this bill, if it does pass, would be in addition to the roughly $8 billion in discretionary spending that the president signed into law last week. The federal agency that's in charge of managing disease outbreaks is under scrutiny now for botching the rollout of crucial coronavirus test kits. Bloomberg's Martin DeCaro has that story.
CDC Chief Robert Redfield was called to Capitol Hill to explain why there have been so few tests in the United States relative to South Korea in an exchange with Democratic Congressman Raja Krishnamurthy.
We did not develop this test for all of clinical medicine. The test for clinical medicine, we count on the private sector. And I said, finally...
So you're blaming the private sector?
I'm not blaming. I'm just
You're passing the buck to the private sector.
Blaming.
Sir, because of this, the virus is spreading. People are getting sick. People are dying.
The CDC's in-house coronavirus tests initially delivered inconclusive results. In Washington, Martin DeCaro, Bloomberg Radio.
President Trump says he will significantly restrict travel from Europe to the U.S. for the next 30 days. Allies say they were blindsided by the announcement. The European Union condemning that decision, saying that it was taken without consultation and that disease does not respect borders in any case. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Life. It's a funny old game, isn't it? 1 minute you're on top, the next, you need all the help you can get.
Yeah, later, yeah.
So make sure you're there for those around you. Don't just be a spectator. Be a supporter. Bleed for life. Join us at blood.co.uk.
Petrol or electric? Why choose petrol and electric? Discover the BMW plug-in hybrid and electric range. 14th to the 21st of March. Visit your BMW retailer. Sometimes electric, always BMW. Participating retailers only.
Lunch? You don't get any lunch unless you've earned it. Give me 20 squats, 20 burpees, and 20 crunches. Then we'll see about that ham and cheese baguette.
Or leave the motivation to Vitality. You could get the Apple Watch Series 5 with our health insurance. Set goals, track your activity, and keep that New Year fitness routine on track. Now that's real motivation. Search Vitality Health. Life's better with Vitality. Available on certain Vitality plans. Minimum premiums, terms, and exclusions apply.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn. When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
And start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Vattel Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city in the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Stocks are extending the slide after financial measures laid out by President Donald Trump to stem the threat to the economy from the coronavirus made investors even more jittery, and the European Central Bank left rates unchanged when markets expected more, much more. We check the numbers every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is down 6.2%, down 6.2%, down 170 now. Dow Jones Industrial Average is down 7.3%, down to 1,724. And the NASDAQ is down 6%, down 481. The 10-year is up 1 16/30 seconds with a yield of 0.7159. West Texas Intermediate crude oil is down 5.6% at 31.14 a barrel, while COMEX gold is down 0.8% at 15.79 even per ounce. The dollar yen 105.11, the euro $1.1150, and the British pound $1.2625. Somehow, rates for U.S. 30-year mortgages are up from a record low as overwhelmed lenders lifted borrowing costs to curb an onslaught of business. The average rate was 3.36%, up from 3.29% last week, and that was the lowest reading in 49 years. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Well, the sell-off continues here, the coronavirus sell-off, we'll call it. Certainly concerns about global demand going forward, and that's really rocking markets, financial markets across the board, equities, fixed income, commodities, pretty much across the board. To get a sense of how maybe to cope with it, how to think about the markets, how to think maybe longer term, we welcome our good friend Barry Ritholtz. He's a Bloomberg Opinion columnist and host of Masters in Business on Bloomberg Radio. He's also the founder and chairman and chief investment officer of Ritholtz Wealth Management. Joins us on the phone, practicing some social distancing, I can see there. Barry, thanks so much for joining us. Again, the sell-off today continues, feels a little bit more urgency today. How do you think about today's activity and kind of how we should be thinking about our portfolios going forward?
So this is now a continuation of what started in February. Some of it is economically driven, some of it is policy driven, and you now have momentum behind it, which implies that this is still got some legs. We never like to see markets open, lock, limit down, but that is telling us that there is some genuine concern about the economy as well as investor fear. This is probably the fastest bear market we've ever seen on record.
If it's the fastest bear market we've ever seen on record, you said that it indicates that we're probably not done. How low are we going to go? How much further?
All right, so you're asking me to enter the realm of wild speculation and
Please.
Guesswork?
Yeah, great.
And so just to indulge you,
Thank
the
you.
S&P 500 was down 57%. When we had the from peak to trough, from the high in October 2007 to the low in March 2009, and that was a situation where you had basically the trifecta. You had the financial system freeze up, you had the economy go into a tailspin, and at the same time you had the market collapse. So that's all three. We're not seeing the same systemic risk here. What we're really seeing, social distancing, quarantine, seeing the NBA suspend playing, the economy is basically going to slow dramatically. Now, the good news is this isn't the sort of thing that is, a long, slow recession that takes forever to recover from. When we finally get on top of this, and historically, modern era pandemics have a fairly short lifespan. Look at SARS, look at avian flu, Ebola, MERS, go through all these things. Once we come out the other end of it, once it looks like, all right, it's now safe to go back and interact and hang out in crowds, this is going to come screaming back pretty quickly. That said, it's anybody's guess if this is an April thing or a June thing or a September thing.
So, Barry, one of the things I think market participants are trying to do right now is identify signs of capitulation in the market. How do you typically define, or what do you look for to confirm maybe we've seen some capitulation in terms of the downside?
So capitulation is a wonderful word, and it technically means surrender. Like, picture the Japanese emperor signing the paper, the surrender papers on, I think it was the battleship Missouri. Like, that is literally what investors have to do. They have to say, I can't take it anymore. Just make it stop. Sell whatever you have to, and don't call anymore. I'm not opening my brokerage account statements or my 401k statements. We're sort of approaching that level, and the two things I like to look at, one is the VIX. This is the biggest VIX spike, the volatility index spike, up to about 64. If you look at during the October 2008, when the first time Congress refused to pass a bailout plan, the VIX went, through the roof. Markets didn't bottom for another 91 days after that, but still, you had a very, very significant lag between the VIX spiking. Typically, there isn't that long a lag. And second, you look at the volume. You want to see a crescendo of volume, meaning more and more people are just saying, I can't take this anymore. get me out. And so those two things will give us a clue. It's not a science. It's an imperfect art. You have to have a little bit of a feel for it. Anytime someone says to us, hey, I want to try and catch the bottom, what's the best approach? The advice, and I wrote this in the Bloomberg column earlier this week, titled "Don't Panic," is plan on legging in over a few different periods. Don't guess that this is over. Assume it's going to be worse before it's better. And at the same time, be willing to pyramid as we come out of it. So you buy in 2, 3, 4 tranches on the way down, and you can, once the market bottoms and starts to recover, and you'll know it, because we'll have a giant up day like we did in March 09, you can continue to add to your long-term positions. But I can't tell you if that's April or August. I have no clue. I'm tempted to put a toe in the water here and start doing some buying, but my assumption is I'm going to be early. These things always go longer than everybody expects.
Just real quick here, are you surprised that we're not hearing more reports of funds closing their doors, liquidating fully, anything like that, given the violence of the moves?
Not, we haven't really seen a lot of it, and when you look at some of the bigger shops like Vanguard and BlackRock, their clients are net buyers. So anybody who's on the passive side looks at this as a buying opportunity over decades, and anybody who's on the active side is trying to dance around this. It really is an incredible side-by-side example of the difference between active and passive investing.
Well, Barry, we will have to have you on to talk more about that as we start to see the progression of this, because that is a very interesting point, and it's one that we're seeing play out in a number of different ways. Barry Ritholtz, founder of Ritholtz Wealth Management and a Bloomberg Opinion columnist. I will say there is a question that I have, Paul, about exchange-traded funds, and certainly on the equity side, there's been plenty of liquidity, and in fact, when there is sort of limit down triggers, circuit breakers that go into effect in the futures markets, you look at the futures on some of these ETFs to try to get a sense of where things are headed and how severe the losses are. That said, in the debt ETFs, you are starting to see some dislocations that frankly are a bit worrisome. You're seeing the shares trade at really marked discounts to the asset values, suggesting some sort of mismatch in liquidity and an inability to trade the underlying bonds quickly enough to reprice in tandem with the falling shares. And we're going to keep on that, because that's something some people are looking at as a potential trigger of more selling. Coming up in the next hour, we're going to talk more, of course, about the markets front and center as we see the markets tumble into a bear market, with the Stoxx 600 in Europe falling the most on record. This is Bloomberg.
Life. It's a funny old game, isn't it? 1 minute you're on top, the next, you need all the help you can get.
Yeah, later, yeah.
So make sure you're there for those around you. Don't just be a spectator. Be a supporter. Bleed for life. Join us at blood.co.uk.
Delayed at the dentist and now you're late for school pickup. You need a free now. Need to take the dog to the vet before lunch. Should have gotten a free now. Trying to get 4 kids and their baggage to the airport. Free now. Sometimes you can't get from A to B fast enough. Download the Free Now app today for quick pickups and reliable drivers, no matter the situation. Less hassle, more hustle with Free Now.
Do you do the same thing every weekend? You know, meet up with the same friends for brunch, browse around the same shops, eat the same Saturday night takeaway. Mine's a lamb balti with mushroom pilau rice. Snuggle up next to the same person and watch the same brain-numbing reality TV. Then maybe it's time to switch it up. Starting with the all-new Vauxhall Corsa, with its bold styling and up to 70 miles per gallon. To switch it up, visit your local Vauxhall dealership or search New Corsa. Official WLTP test figures for comparison purposes only. Real-world figures may vary.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
financial capital of the world. 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Is there any bank right now in the U.S. that you think is a buy?
Do you think Chairman Powell has lost the market?
Jeff Bezos is no dope. What's the big ka-ching?
The big question, I think, for investors is free cash flow.
Breaking market news and insight from Bloomberg experts.
The U.S. tariffs actually hurt both China and the U.S.
Large strategics are looking to either buy or invest in innovation.
Soybeans and corn have been basically at or below the cost of production for about 4 or 5 years.
What we see more bonds, more yield.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Well, the coronavirus is having impacts across the U.S., even sporting events. The NBA suspending their season. We'll dig into that coming up. Plus, also, we're going to take a look at how some big companies are maxing out their credit lines. What does that mean for the overall credit markets? First, we're going to go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
Paul, it's like Dad used to say, this too shall pass, but it might pass like a kidney stone, at least for now, as stocks continue to go deeper into the red. Investors just don't seem to have any faith in what the U.S. and European policymakers are doing in response to the worsening spread of coronavirus. Treasuries and the dollar are surging as havens. Julian Emanuel, BTIG Chief Equity and Derivative Strategist, tells Bloomberg this shock is quite different from the previous shocks that he's seen.
You're living in a time that only has a number of close parallels, and the thing that is most distressing is the speed at which we got to this point. Essentially, if you look at the financial crisis, it was more or less brewing for almost an entire year before you got to that Lehman low. And we're essentially a month into this in terms of the shock to the markets.
We're checking the markets every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is down 6.5%, down 179. The Dow is down 7.75%, down 1,826. And the NASDAQ is down almost 6%, down 472. The 10-year is up 1 and 26/30 with a yield of 0.6829. The West Texas Intermediate crude oil is currently down over 5% at $31.31 a barrel, with COMEX gold down 3.6% at $1,583.20 per ounce. The dollar yen, 105.18. The euro's $1.1143. The British pound, $1.2619. Starbucks is taking this seriously. They've outlined measures that it may take to help prevent the spread of coronavirus, from cutting down on seating to actually closing some locations. Starbucks is down 7.4%. That's a Bloomberg Business Flash. Bloomberg Markets continues now with Lisa and Paul.
Thank you so much, Greg. Bloomberg Markets brought to you by Commonwealth Financial Network. For the 6th straight time, J.D. Power ranks Commonwealth #1 in independent advisor satisfaction among financial investment firms. Visit commonwealth.com to learn more. We are experiencing the fastest ever bear market in history. We are seeing record plunges over in Europe, where we see the stock 600 tumbling more than 10%. And the question that I have is, who is most vulnerable here? And it comes back to time and time again, the smaller companies in the United States, frankly, at least when we look at the domestic picture. Dave Wilson, Bloomberg Stocks editor, joining us here in our Interactive Brokers studios. What's the latest on that front?
Well, you've got the Russell 2000 index down today by 8.1%. So, bigger declines in smaller companies than larger ones. The S&P 500 off 6.8%. And just for some context, the Russell had a peak last month, February 20th. Since then, it is down 31%. So even steeper drop from a high than we've seen with the S&P 500. And actually, Russell's headed for its biggest 4-day drop since October 1987. And that's even with a gain of 2.9% on Tuesday. So that's how far smaller companies are falling here. And I'll give you a few specific examples. One of the Russell's steepest declines belongs to Zag, whose name is its ticker, ZAGG, the maker of mobile phone accessories. Well, that stock's down 48% after the company called off efforts to find a buyer. Zag also posted fourth quarter results that were well below analyst average estimates in the Bloomberg survey. Similar disappointment on the earnings front at Party City Holdco. The ticker is PRTY. The fourth quarter results from the Florida supply retailer came up short of projections. The stock's down more than 40%. And on the other hand, one of the biggest gains of the Russell, Mallinckrodt, ticker MNK, the drug maker, up 21%. Now, Mallinckrodt rose in the past few days as they reached a $1.6 billion settlement of opioid claims. Today, they're out with a press release talking about the evaluation of another product of theirs, nitric oxide, inhaled nitric oxide, as a potential